All right, what's up, everyone? Welcome. Let me know if the audio quality is good. It seems like the intro that was supposed to be running did not run, so I'm just gonna be running the intro quickly before we go live for real. All right, let's do it. I'm muted again. God, man. Thank you, everyone. Thank you for being so quick in the comment section to telling me that I'm muted. Thank you very much. This was a great intro. I really had some really good things to say, but apparently I was muted. Okay, so is the sound good now? Hopefully the sound is good. The quality of the audio and the video is all good. It's Tuesday. It is I. We are here together to do some live trading. Let me adjust my camera a bit. I'm gonna be more centered. Let's make sure I'm not breaking anything. You know what? Let me know. Am I looking? So I'm trying to mirror the camera. So am I looking now that I'm looking at this way, right? Am I looking outside the screen or am I looking at the actual chart? Where am I looking? Let me know. Okay, am I looking outside of the screen or am I looking at the chart? When I'm looking at this outside, yeah, okay, outside. Well, okay, let me try this then. Let me try this. Oh, that's weird. Not what I meant to do. That's also not what I meant to do. Look at that. I'm upside down. Good stuff. Good stuff. What about this? Am I looking outside the screen or probably the same way, isn't it? Oh, now I know. What if I do this? Aha. Now I'm supposed to be looking at the screen, right? Am I looking at the screen now? I'm looking at the screen now. Very important stuff. This is good. You know, very important stuff that we have to figure out before we go live into the markets here. All right. So we're looking at Bitcoin right here. I want to start. I want to do a complete. I want to do a complete. Just a breakdown here of the market, of the forex market. I'm going to begin by taking a quick look at Bitcoin. What I'm going to do here is from a strictly technical point of view. I want to look at. And you know, as a swing trader from that perspective, I want to look at the important key levels, the key support and resistance levels that we have in the chart to kind of go through the markets, see if I can find anything interesting for you guys to. I'm not going to give you any like trade setups, but I'm going to give you levels where you might look at, apply your own technical analysis, apply your own system to these levels. Also gonna have to change from the desktop here from the office to my laptop quickly, so I might be doing that in 20 to 30 minutes or so. So I'm gonna take a quick minute break when doing that. All right. So we got Bitcoin right here. Now, what do you think about Bitcoin? What do you think about Bitcoin? Gary L. What's up, Gary L. Who is joining us today? It's going to be me here, and then later we got Pedro, we got Victor, we got Mike, we got LJ, we got Griff, we got Deanna. We got a lot of people joining us here later in the live stream. But today we have me, myself, and I. Okay, so what are we thinking of Bitcoin? Do you think we're going to go higher or lower here for Bitcoin? Let me give you my thoughts here on the markets, and I will tell you what I think about Bitcoin. Yeah, just a minute or so. Could be good. All right, Mike is here. Can be covered quickly for me as I switch to my laptop, my other setup because my graphic card is not really the things it's supposed to be doing. So I will be back in just a bit.
Alrighty. Good timing actually, because I'm just about to get tagged into a GU. Hopefully, just want to check if might have set my entry a little too low. So let's see. There we go. Tagged in on TradingView, but I'm not sure if I'm going to get tagged in on MT5. So I might have to do a market order on this one. Let's wait and see. How are we all doing, guys? Technical issues, always the way. Yeah, it looks like I'm going to get tagged in on TradingView here, but I'm not going to get tagged in on, let's see, on MT5. Let's wait and see. There's already a gap, no closed in Bitcoin. Yeah. I'm looking at GU at the moment, guys. Anyone looking at GU? Let me know. Let me just sort out my MT5. And let's see. Why is my camera? Silly buggers. Hang on a second. Okay. Yeah, it might. Do you know what? I might have been tagged in on that. No, I think we're all right. Actually, if anything, I might actually bring the entry down to here. So MT5 TradingView isn't my live terminal. I've got it here with a trade manager, but kidding. It's going to go to the races by the looks of things. Let's see. We'll see how this 1 minute candle closes. And if needs be, we'll get in on a market order, but I'd rather not if I can avoid it. So let's see. Let's see how it plays out. But how are we all doing? First time on the new Twitter account as well, so good to see you guys. Hope you're all doing well. M9, good to see you, mate. Hope you're good. Hope you're good. Yeah, the 1 minute. Yeah, see that 1 minute candle just pushing back down again. So, yeah, I think we might be all right. If we can see it come back down to this level here, then that'd be more of an interesting trade. The way that the 1 hour candle started with this perfect equal high and wickless candle suggests to me that we are going to be going long still. But let's see. You know what, it might. Rather see it come down just a little bit more first, rather than just going in from a market order. But let's see. Not going to come back down for me, is it? That's not what I want to see. Well, maybe it will. We'll see. I'm going to leave that one because TradingView, as I said, it's not my actual trading terminal. I've got my MT5 open, so I think I might just stick with where I am. My actual entry on MT5 is about here, roughly. So just double check. 407. So it's actually there. That's my entry there. So actually, I might bring that just a little bit higher.
All right, can you guys hear me?
We can hear you. Well, I can hear you. I don't know about anybody else.
Well, hopefully they can hear me as well.
It would be a shame if they couldn't hear your sultry tones.
Yeah. Let me know in the comments, guys, if you guys can hear me or not.
Let us know, guys. Is your GPU still causing you problems then?
Yeah, I'm not really sure what it is. I think it's the graphic card and also the I have, I bought a new screen, a new wide screen that I'm using at the top to look at the different streaming tools and everything, and that kind of like it starts flickering and then it's turning off and it's turning on. So I think it's like something perhaps with the power supply to that screen.
Have
Which
a look at the NVIDIA drivers and everything, because I got a notification saying install a driver this morning, and then everything just went completely haywire and completely wrong.
yeah, so actually,
there might be something there.
yeah, I mean, I installed a new graphic card, I installed new drivers, and then the camera stopped working, the sound stopped working, so I had to install new audio drivers, and that didn't work. So I had to go back and install an audio driver from like 2003, and that worked. And you know what? Like I feel like I don't have time. Honestly, I don't have time to do all of that. So I don't know. I don't know what to do. Probably is going to be. I don't know. Let's hope we can make some money here today. So I can get a new, it's a new house. I think I need a new house with a new power lines and everything.
It's a bit of an extreme solution, isn't it? It's like, okay, the computer's not working, so let me buy a new house.
Yeah, well, yeah, I've tried everything. I think it's just better to get a new house.
It's like there's nothing wrong with the computer. It's the house. The house is stopping the computer from working.
Yeah, definitely the house.
Oh man.
Yeah.
Alrighty, well, listen, I'll leave you to it then. All right.
All right. Good stuff.
All right. Take care, mate.
Thank you.
Are you stop removing me. Let me remove myself then.
I'm not doing anything. All right. Here we go. Okay, so what I want to be looking at today is we're going to be looking at Bitcoin first and foremost. I want to show just done some analysis this morning on Bitcoin. So just a very quick LJ says get driver easy, works great. We'll scan drivers and update for you. Yeah, okay, I'll do that. And but probably try to get a new house as well. Okay, so looking at the weekly right here, we have a Bitcoin. Obviously, the primary trend is very, very bullish, looking like we are, we have the highest weekly candle close this Friday, the highest weekly candle close in forever. Which that's I guess that's what happens when you do close into new all-time highs. So what I'm looking at here is obviously we're looking at a very healthy, strong trend for. Very strong, healthy trend for Bitcoin. What I like about this is when we put on the fib of this, if we adjust the fib to the latest weekly swing move, we see that the current move up into new all-time highs hit the minus 0.236 almost perfectly, which it does add confidence to the fib levels, right? And especially also I like the fact that that's minus 0.236 comes in at around that 125k region as well. We could say that perhaps this move to 123,000 might have been a front running of that 125, and that minus 0.236. So I am going to look at this weekly fib as potential areas of resistance if we do get another impulse move to the upside. Even if we do hit that previous all-time highs right here, I do think that this fib and the fib levels are in play, which means if we do break above that minus 0.236 or the 150k, we do have that minus 0.382 at around 132,000, which then again sits right above the 130,000. So we might just assume that the 130,000 will be the area where we expect heavy resistance. So that's just my overall outlook on the weekly. But importantly, what's more important here is the levels to the downside, where we have the previous all-time highs at the high of the fib. And on the weekly, this looks like a very good possible break and retest scenario for Bitcoin. Going into the daily, what we see right here is a possible break and retest in play right here, where we have the previous all-time highs right here. This is the level shown on the weekly. But what I've also added here is the Fibonacci retracement tool from the previous, from the very low of the not the breakout move, but the very low of what you could call like a swing move here on the daily.
So the fib low is around 98k, and then the high, of course, at the high of this move at around 123. Now, what you can see here is that the 50% fib comes in very nicely at around 110, 111,000, where we had the previous all-time highs. We also have the daily 20 EMA right here and the daily 50 EMA. In a couple of days, the daily 20 will most likely move a little bit higher, as well as the 50, which creates a good zone of confluence with the EMAs, nicely in tune with having the 50% fib and that horizontal levels right in the middle of those EMAs, creating a nice little confluence zone right there. Going into the 4-hour, we have the levels a little bit clear. We see the levels more clear here. Now, I've marked out a horizontal level with a number 1 here. This is the 112k level. That is the previous, like that is the all-time high move, right? That's where when we broke that level, that's where we had that strong push to the upside. And by measuring the fib of the breakout move, and what I mean with the breakout move is taking the very low prior to the breakout move, where the breakout move originated from. So I believe that we had one move here, consolidated, another push to the upside. What we get here is that level 1 area, confluent with the 112 area, sits right in the middle of the long reload zone at the 0.702. So I believe that this zone right here, if Bitcoin is bullish, and if the high if the strong bullish momentum is going to continue and resume, a lot of times Bitcoin likes to not retest the perfect levels. It likes to front run the perfect levels or overextend the perfect levels. So maybe we'll see a bounce not on the previous all-time highs here, but maybe we'll see a bounce, right about the 0.618 or all the way down here, right? So that's what I'm looking at on Bitcoin. I think this is extremely bullish for Bitcoin. So I'm looking at that level to perhaps take some long trades on for a swing position. Now, we also have to make sure we are aware of the level 2 here at around between 117 and 118. If we do break down here to the downside and have a bounce within this area, then we could assume that this level will act as low time frame resistance on the move higher. We also see that this is now a level where price consolidated before breaking higher, and we're not testing that level as support. So if this level holds as support and we continue higher, chances are that we're going to continue that move to the upside and perhaps hit that 125k or even 130k in not too long. So it's very very interesting to be watching Bitcoin's intraday movements right here. A breakthrough downside, and I'll be watching a move down towards the 113, 112, holding this level, and we could perhaps get that breakout towards 124 or 125. All right, so that's Bitcoin. Just quickly going through Bitcoin. I know that there's not a massive interest in these live streams to cover Bitcoin, but as a Bitcoin trader and a active crypto trader, that's something that I like to be watching and always keeping you guys updated, because there's a lot of opportunities on Bitcoin and the crypto market as well. Now, interestingly enough, with Bitcoin breaking out shortly after we had the S&P 500 breaking new all-time highs as well, we can look at the daily right here, and the high of the high of today's daily candle is trading in all-time highs. We did break into new all-time highs during, I believe, the Asian session on the S&P 500. I believe also we have other indices breaking into new all-time highs. We have the let's see, do we have the UK 100, the FTSE? Did that one break into new all-time highs as well? Let's see. Yes, we had the break into new all-time highs yesterday as well on that one. And today, of course, we had that push to the upside today as well, pulling back slightly, but we are testing a very good area right here now on the UK 100, the UK stock indices, or the index. The index. The indice? The index. I don't know. Who cares? Who cares how you pronounce it, as long as you can trade it, right? Now, this is a good level right here. 8,990. Could we say 8,990? Do we have 8,990? Yes, we do. Right here. That's also where, surprise, surprise, we have the reload zone right here. If you're looking to trade the indices today, if you're looking at the UK 100 index, this is the level that you want to be looking at because we're retesting previous all-time highs right now. Okay, so a retest of previous all-time highs in a bull market like we're obviously in right now might open up the doors for some really good continuation to the upside. For confirmation, for low time frame confirmation, preferably I would like to see a move lower. I would like to see a move down to 8,900 and maybe 85. A little bit of a deeper retracement. But again, if we are in a strong bullish momentum market, we're probably going to be front running that perfect level with hitting the 0.618 right here, which is also a very, very good area. Looking for low time frame confirmation, we can go down from, we're looking to 1 hour, like not right now, we're getting a overall high time frame structure idea, and we have a level that looks really, really good for a possible a level basically where the bulls are probably, at least to me, expected to come in to defend that level. Now we're going to zoom down all the way down to the 1 minute, and I want to see like how can we confirm that it might be time to enter a trade here. At least for me and the way I'm trading, looking at 1 hour here, the 1 minute, we have that move to the downside. Are we seeing any bullish shifts in the 1 minute? I would say that if we hold this level and start trading higher, I think this looks like a fairly good confirmation of a bullish reaction. So we're kind of looking at that rounded price structure with low time frame confirmation of prices wanting to go higher. Let's look at the 5 minute right here. I like what I'm seeing right here. I like what I'm seeing, but I would like to perhaps get above that high right here. Getting above that high, maybe breaking out, maybe looking for a low time frame retest and a retest of that breakout level, stops below the very low of the move. I mean, this could easily be a one-to-one risk to reward for an intraday trade, but if you're looking for the UK indices to go even higher, then this could be a great entry to get in on that bullish momentum. But then again, if we break lower, we got some bearish momentum coming in right now. If we do break lower, that level at around 8,980 looks like a probable level. Okay. Okay. So let's see. We got some comments right here. Let's go through the comments. Euro USD. Let's take a look at Euro USD. All right, RFT Trader. Let's take a look at Euro USD. First of all, I want you guys in the comments to let me know what do you guys think about Euro USD. Are you bullish or bearish on Euro USD for the next throughout this session? Okay, throughout today, basically intraday. Are you bullish or bearish on Euro USD for the rest of the day? So I just found my password for a evaluation account. I'm just going to go in and log into that one. This time I'm going to make sure that I'm not logging in and showing you all the logging and everything. And you know that captcha, whatever it's called, when you're logging into something and you're supposed to be selecting all the images of, like, select all the images of motorcycles or select all the images with chimneys or whatever. I think I might be the worst person at that ever. Honestly, I tried to log in to use the Fibers hub, and I've spent like 10 minutes just trying to get past that. It's ridiculous. Like, it's designed to see if I'm a human or not. Yeah, I don't know. I guess bear with me, guys. Here I'm on my laptop and things are not moving very quickly here. Okay, so where is that one? High stakes. That's going to be the one. Right, just fixing the account here. All right, good stuff. Just waiting for the password to come my way, and we're going to be logging into that one and start trading that one today. Okay, now let's go back to the comments here. Yeah, so why like everyone has, yeah, exactly. Venetia says everyone has this problem. So if everyone has this problem, and why, like, they're gonna change something. Like, is it really that difficult to prove that you're a human these days? It's really crazy. So I'm going to add a poll in the comment section. I'm going to be asking you, are bullish or bearish on Euro USD intraday? So go in there, answer that one, bullish or bearish on Euro USD intraday, and then we're going to be looking at the actual chart for Euro USD. I'm going to be adding some alerts here as well. Again, I'm going to be adding one alert down here, and then one alert above that one as well. I'm going to go back to Bitcoin quickly and just add some alerts on that one as well. Now, if you guys are using TradingView for your analysis, or whatever platform you're using for your analysis and your trading, make sure that you utilize whatever alert system that you have, whatever price level alert system that you have. Because if you've done analysis on your chart, then all you really need to do is just add price alerts to whatever level you're looking at, and one alert below price and one alert above price. Then unless those alerts trigger, you have no reason to look at the chart. So what you can do is, if you're a swing trader, this works great if you're a swing trader. Every weekend, you go through the whole list of available pairs or pairs that you're trading and you're interested in trading. Go through the whole list every weekend when the markets are closed. I like doing it when the markets are closed, because then influenced by the current price action or the current volatility in the market. Add all the alerts above and below price, and then forget about the markets unless the alert goes off. Then when the alert goes off, you go to the alert, check price. If it's interesting, you place a trade. If it's not interesting, you add another alert. So you let the alerts work for you. It's a very, very good way of doing that. So we have a comment from Nora here saying that, what is she saying? She's saying that my strategy is based on a break of high or low of a range. So you just need to mark them and set alerts and wait. Exactly. That's a perfect example. You have a system, and then you're applying the alerts to the way that you're trading that system. So you're now, in a sense, trading a semi-automated system. Very, very powerful stuff. Okay, we're going to be breaking down Euro USD here quickly. But before we do that, just going to look at Bitcoin and just add a few alerts on Bitcoin. I want one alert right here on the 50. Then I just want one alert above here. Okay, good. Now let's move on to Euro USD. I'm going to open a new chart here as well. Just waiting for TradingView to load. All right, but this is interesting. There's a nice little circle it got right there. Okay, here we go. So let's go to Euro USD. All right, perfect. So Euro USD is now testing that daily 20 EMA, perfect level for a potential bounce right here. Like the daily candle is showing us that there's some decent bullish momentum coming in here on the daily. Let's check the poll as well. What is the poll telling us about Euro USD right here? It's telling us that 66% of you are bullish on Euro USD, and I would say that I think that is a good estimate. I think the fact that most of you are bullish on Euro USD, I like that, because I'm also bullish on Euro USD, not just because it's confirming my views, but it's also because I know that most of you are technical traders, and I think it's a good idea to be trading with the trend. And if we're looking at Euro USD here, there's not a lot of bearish things going on here. We can of course see that if we look at the most recent weekly candle, of course, this is it's a bearish candle, and it did engulf the body of the previous weekly candle. But considering the fact that it's a strong move to the upside and we're actually above a major resistance zone, I'm not really looking at that candle as a end of the primary trend. Maybe a local top in the secondary trend, absolutely, but not an end to the primary trend, at least not today. Okay, so on the daily right here, we're hitting the daily 20 EMA. So I'm actually going to be opening a trade here. I'm just going to be checking my EAs first quickly. I'm in a long on USD JPY. I got the order set for GBP JPY long. I'm looking for short on US 30 for some weird reason, and also got the long orders on gold. But that is, I'm going to be logging into the other account that I have. So just bear with me here a second. I got MetaTrader up here. You're watching TradingView, but I got MetaTrader up here. So I'm just going to be logging in to a high stakes account, because I decided that I want to start trading a specific account for only my swing trades. So I've started a new evaluation account with only swing trading, because I want to differentiate between the intraday trading and the swing trading on these live streams, because it gets quite confusing sometimes. If I'm in a long trade, a swing long on USD JPY, for example, and then I find intraday setups on that one, it's sometimes it's a bit confusing to differentiate between what's intraday trades and what's the swing trades, and then you have to like calculate all the different risk parameters based on that. Regular mail as well, nice. Okay. So we got that one. We're on that new account. Just going to be opening that one up. Okay, I'm just trying to find. Let's go bring up the right. Just trying to bring up all the symbols here and making sure that I have everything added. So I'm on my laptop here, so I'm not on. Yeah, Venetius, that's not a bad idea. I can definitely do that. All right, so we got. Okay, I'm gonna open up a new chart for EUR/USD here in MetaTrader. Getting ready to perhaps open a new position here. Start building a position on this. So this is a high stakes account, which is obviously not the best account for swing trading, right? But that's what we're gonna go with here, and we're gonna see if we can find something interesting. Okay, so now let's cover the overall setup here. So looking at the daily here. Now, what I first want to do is I want to mark out the fibs here. So we're going to be using from that low to this high. I want to be marking out the 618 and the 50. I think the 50 is definitely a very important fib level. Okay, so I believe that what we're seeing here might be. So if we're looking at the higher time frames here for Ethereum, did I just say Ethereum? We're looking at Euro USD. You see, I'm thinking so much about crypto now. The fact that Bitcoin broke into new all-time high, and we're seeing this volatility in the crypto market. Even when looking at Euro USD, I'm calling it Ethereum. Okay, so looking at Euro USD here, and if we zoom out and we look at this overall support area here that we have between 1.16 and 1.17, we have the 50% of the latest up move right in the middle of that zone, and then we also have the daily 20 EMA. So for me, it's not about looking at the exact levels. For me, it's about finding an area on the chart that I like to get an entry somewhere within this area. But I also have to be mindful of the fact that there is a possibility of seeing a move lower. We can see a move down to 116,300 or maybe even all the way down to 116. But I want to be able to start building a position here. Now, this is going to be a swing trade, a long a higher time frame long-term trade. Now, because of the daily max loss that we have for high stakes, which I believe is 5%. Yeah, I think it's 3% for hyper growth, but it's not a hard stop. It's 5% for high stakes, and that is a hard stop, which means that this position could potentially in a few weeks be well in profit in terms of pips. But I want to make sure that the unrealized profit in equity is not going to be more than the daily loss if I have a retrace. So I got to be entering small, only very, very small positions once I start building this position. And we also have news today. We got CAD CPI. We got USD CPI coming up at the 2:30 today my time, which is going to be at in about 3 hours and 50 minutes, something like that. Correct me if I'm wrong, but we do have CPI coming up here. Okay, so what is this setup based on? What is this setup based on? Okay, so this setup is based on, let's go to this chart right here, and we'll be adding some weekly levels. So this trade on Euro USD let's make sure I'm getting the right chart up here. I think I might be on the wrong one. No, this is the right one. Okay, so I'm thinking that there is a possibility of Euro USD reaching as high as 1.20. So 1.20 and potentially even breaking out and hitting that 1.22 or 1.23. We also have the highs up here at 1.25. It's not a completely crazy idea to see Euro USD continue higher in that manner. So on the daily, we have an interesting looking entry area right here. And if I want let's say I want an average entry on perhaps the low of that wick. If I get an average entry around that area, where's the invalidation of this whole idea? Now, actually, right now, looking at the daily, the invalidation would be all the way down here. So we're looking at a big move to the downside to invalidate this swing idea. So what's the P&L? What's the risk to reward up to the 1.20? Well, that would be around 1.5, 1.6. So the first thing I'm going to do here is I'm going to start building a position with this invalidation in mind. And then if we, sorry about that, dropped my phone. So if this creates a new swing point on a daily and we start moving higher like this, then this becomes a new invalidation point. I can move this stop loss up here and adjust risk and perhaps adjust position size accordingly. But now I want to make sure that I'm able to start building a position here in the next few days for Euro USD because it's now in an area of interest for me. So I'm going to be opening a position here with a very small risk. So I'm going to be switching over to see if I'm able to do that in a nice way. So I'm going to switch to this here, and then I'm going to be switching quickly to my MetaTrader account. So in regards to the questions on whether price will do this and that, I mean, I am a technical trader. I'm not really looking much on fundamentals, but what I can say is if you're not sure about what you think about, if you're not sure what will happen around CPI, just wait for price to tell you what it wants to do and then follow whatever price is doing. I would say wait at least 30 minutes after the news event and see how price is reflecting the news event. So where did I have that invalidation level on for the swing idea? Now that would be all the way down here, which means I am happy to add to the positions on EUR/USD all the way down, perhaps to this level, which means I have quite a lot of room to the downside. So I want to make sure that I'm able to enter positions so that if price comes down here, I'm able to add more to this position, but I don't want to be having too much risk on this one. So if I risk 1% in total on this trade, I want to make sure that so the daily loss limit is 5%, which means if I risk in total 1% on this setup on average, so my average entry, if price then moves up 5R, moves up 5R and then all the way back down to entry, I will lose the account. Now, the chances of that happening is very low because if price moves up 5R, chances are that it have now created new higher lows on the daily, so I can manage that trade. Now, this is very important for those of you who are actually swing trading on a high stakes account. Super important that you take that into consideration. Same thing goes for a hypergrowth account where you have a 3% stop out level as well. So what I'm going to do here is I am going to just add, let's see, what happens if I add like 0.12. Might have, yeah, so that's going to be the minimum, just the minimum position size right here. So I'm going to be looking at adding 0.01 in lot size on EUR/USD, sort of like a dollar cost average strategy. So every day, if I see that price is moving lower and lower, I will be adding to this position, and eventually I will be happy with having 1% risk, which should be around 8 different orders like this one. If I'm not, haven't calculated that, I think it would be 8 different orders. So that's going to be the stop loss. I'm not putting in any take profit right now, but I'm going to be entering that order right here for EUR/USD, starting to build that position. So most of the time in these live streams, what I do is I live trade and I do more intraday trading. But it's also, I think it's very important to show how we can trade accounts like the high stakes with a swing trading approach as well. Now, you might ask, like, what if price doesn't continue down? What if price just goes straight up? Will I only have a 0.01 position in? Not really. What I will do in that case is let's go back to MetaTrader, and I will show you how we can manage that trade if that happens as well. Okay, so We're now back in MetaTrader. What's up, born in 2944? Hope you're doing good. Hello, Mr. Caps Lock. Hope you're doing good today. Okay, so what would confirm this swing trade to me is if we, and what I mean confirm the swing trade, basically what I mean is, okay, we're not putting in local low. Most likely we're going to start moving higher. And this could happen after CPI. We also have the, now that already happened, so never mind. Yes, exactly. The fact that you have different leverages and different percentage as stop loss, it really does change your it doesn't change the strategy, but you have to adjust the strategy quite a lot when you have to adjust it quite a lot. I mean, the difference between having a 5% daily stop out limit and a 3% daily stop out limit, that's huge. That 2%, that could make all the difference. And also the difference between having a 5% daily stop out limit as a hard stop, which means that if you hit the 5% daily stop out limit on a high stakes account, which is based on, I believe that's based on equity. Yeah, so that's your unrealized profit and loss, which means that your unrealized profit and loss can go up and down 5% without you taking profit, and you're going to lose the account. On the hyper growth, it's 3%, but you will not lose the account. You'll just get locked out for the day, I believe. So yeah, that's very important. Very, very important. So on your USD, you see I have one alert above here. Okay, so if price breaks above this level like this, then I will start adding whatever I wanted to add down here. So I'm taking that 1% and I'm adding it to that. Yes, trading with EAs at the 5ers is accepted. You can trade with us using your own EAs. You cannot, however, use an EA that you have bought from someone or had. That's you can only trade an EA that only you're the only one who have access to, basically. Okay, so that's the trade on Euro USD. Now, I also have a long position on my private account on USD JPY, but I wanted to see if we could perhaps follow that idea. I mean, I have a very good entry on my private account, which is this setup right here. But I'm thinking, is there any possibility of getting in on this trade? Because I do feel like it's somewhat confirmed. I feel like USD JPY has not put in that high time frame bottom and is you know what? I don't think I think that idea is gone. This is an idea that comes along like once every year, and I managed to get in on that one, and now we're up quite a lot. So I'm not not gonna follow that one. Okay, so the simple answer I have to this is that we don't deny payouts. We don't deny payouts at the 5ers. If you make money trading our account, that money is yours. We don't not deny payouts. Okay, so yeah, that's the long idea I have on USD JPY. I'm not interested in opening any new swing position. An EA is an expert advisor. It's it's the word that MetaTrader uses for a trading bot. Basically, an EA, an EA can also be an indicator or a script. But most of the time, when we're talking about EAs, we're talking about automatic trading bots. Basically, I have a few EAs myself that I'm running, as most of you know. I'm very, focused on developing an algorithmic trading portfolio that I'm using right now. And of course, full transparency, I want to show you all what that account looks like right now. I have two accounts that I'm running the EAs on. First is a bootcamp evaluation account, and the second one is a funded account, funded hyper growth account. So let's Let's take a look at the funded account, which hopefully is starting to get out of that drawdown. See if I can take a screenshot of that. If it's possible. So this is the equity curve on the funded account. As you can see, I started with 40K. Now the algo portfolio, as you know, was in a very good winning streak. Got funded with this one, and then of course the very first trade on the funded account initiated a drawdown phase on the portfolio. So currently, right now, I'm in a drawdown, but it looks like I'm slowly but surely adjusting the settings of the EA and hopefully getting out of that drawdown soon. I've also added a new EA on USD/JPY, breakout strategy on USD/JPY, but the what I find most challenging is not creating the strategies and the EAs. What I find most challenging is look, I'm using an approach that might be slightly different than to others who are trying to develop algorithms. I'm not looking for one strategy. I'm not looking for the holy grail. I'm looking for hundreds of different strategies with a tiny edge. Combined, it creates a portfolio with much better statistics than every individual strategy. So for example, most of the strategies in this portfolio has between 0.5 and 1.2 Sharpe ratio, which is not very good. But combined, they have 1.9, which is definitely better. But the biggest issue is trying to come up with a good risk management strategy on this portfolio, because you can't just take 1% per trade or 0.5% per trade on each EAs. Every individual EA needs to have a specific risk management strategy based on its drawdown and all of that. For example, I have a gold trading strategy. It takes very few trades but has a very high win rate. That one I can risk a little bit more on. On the new USD/JPY EA, for example, it has a quite large max drawdown, so I will have to risk quite a little on that one. But it has some trades are just massive winners. It's a trend following system where it's just going to trail it, stop up, and it creates a really big winners, but has a deep drawdown. So that one has to have minimal risk. But as always, I'm going to keep updating you guys on the process with that as well. Let me know if there's anything else you want me to look at here today. In the I've already taken a look at Bitcoin. So if you're asking for Bitcoin, you can go back and check the beginning of the live stream. I looked at all the levels for the Bitcoin, for Bitcoin. Okay, what else are we looking at here today? I guess most of you want me to look at gold as well, so we're going to take a quick look at gold. Yeah, EUR/CAD, we can definitely take a look at that. All right, EuroCAD. What do we have on EuroCAD here? Let's do a top-down analysis here. We're looking at the weekly. Okay, so what we can see here, obviously, we're at a high time frame resistance here on the weekly. I think that's quite clear. So you can mark out the highs and the lows of that zone. So this is on the weekly on your USD. All right, I got Pedro in the background as well. Let me know if you want me to add you. Yes, you know, Pedro, I do hear you there in the background. No, I'll add you. If you're ready, I will add you.
To understand the way out where people. Okay.
All right, here we go. What's up, guy? What's up, Pedro? How's it going?
Good morning, everyone. Yeah, I'm just getting used to the display, to be honest. Okay, the comments are on the left side now. Good morning, everyone. Where is this? 1 hour ago. These are most recent ones. Okay. What's up? How are you, Jonatan? How is your day so far?
I'm all good, man. All good. How are you?
Yeah, I'm good as well. Good. I'm excited to see what moves are going to have today with the CPI, to see if we are going to finally have some reversals on the dollar. Basically, longs on the euro. I think you were looking for a long on euro, kind of a swing position.
Yeah.
Let's see if that's going to play out. Yeah. Hi everyone. Yeah, share in the comments as well. How is your week so far, and how are you positioning yourselves for today's session? I'm curious to see what you guys are looking at.
Yeah, I mean, we just had a chart request here on the Euro CAD, so I'm looking at that one, and we're looking at the weekly right here, and I do see an untested breakout level here at around, let's see, 1.58500 on the weekly. So that is something I like on the weekly. It's also right above the 50% fib right here. Looking at the daily, I think it lines up nicely here. So we got the weekly fib there, and then I want to be adding a daily fib here as well. And as you can see, it kind of lines up nicely with the 50% here. So it retraces down to this area. I'm going to be adding an alert right above that level, and I think if we do hit that level, would make a lot of sense to me, at least, to perhaps start building a long position on EuroCAD. But then again, I mean, I'm already long on Euro USD, so there has to be a and I feel like Euro USD and EuroCAD, at least on this previous move right here, seems to be quite similar. So they're probably going to be quite correlated here, which I might just go with Euro USD. Might just go with Euro USD instead.
Yeah, sometimes, but EuroCAD is still a lot of attached to the CAD pairs, and CAD has been of the tariffs between the US. Sometimes you do have moves that only happen on EuroCAD and not on Eurodollar. Yeah, EuroCAD has been an interesting one. It's been in a range in the last few weeks, which is interesting. Where is EuroCAD again? I was EuroCAD in here. Yeah, can I pop up my chart in here?
Yeah, so what you have to do is you have to the left, you have the scene section. So if you click where it says Pedro, you scroll in that scene, and then if you click on Pedro, it's going to transition over to your scene with your screen.
Hold on a second. Yeah, I don't. Are you talking about on the top right corner where it says Pedro?
Oh, no, right. I don't think you can do that, so I'll have to do it for you. I don't think you just scenes.
Yeah, I cannot change the things.
All right, that's better.
Yeah, EuroCAD. Something that I like about EuroCAD is by the way, who asked about EuroCAD?
I don't know. Let's see. We had.
Yeah,
see what I have here.
yeah, not Beko. It would be great to know what you are looking for as well, in terms of are you looking for long shorts? What is your take? Not Beko. I hope I'm pronouncing your name correctly. But something that I look about EuroCAD is that price is at a resistance level, and it doesn't manage to break that level of the bucks. I don't need to go back quite a lot. Yeah, this is in 2018. Then you have 2016, and we go all the way, like almost close to 2009, since we even managed to break above this 1.616 something. So we are at an interesting level in here, which is going to be interesting to see if we eventually manage to break it or not. But this is even almost considered as a quasi-model as well. So we do have the left shoulder, we have the head, we have maybe the breakout structure, even that low, and maybe this is a massive daily or monthly quasi-model that we have in here. Regardless, we are having that reaction on the world time frame. When you're, at least when I look at these tops in here, I still see a little bit of a supply that was still fresh. That top never reacted from it, and we are having that reaction right now, basically for the last couple of weeks in here. So that's an interesting one. And then of course you can maybe try to look into. This is not loading. Then maybe we can look into the world time frame to see where the opportunities are. And if you should be already expecting or not a massive reaction from here to the downside, or is actually price eventually going to go up and break that strong level of resistance that we just looked at. So I think maybe, again, as a confirmation, maybe price breaking again these lows and getting actually some more momentum to the downside could start opening the space, and maybe you have that move lower on EuroCAD. And of course, if price actually starts breaking here, then maybe we can go higher. But again, if you are looking more of a short bias, depending on how do you want to trade, but for confirmation, I'll be waiting for price to actually break a little bit more with some certainty this structure in here. This one could have been a nice little move depending on the approach, but price just took all the liquidity in here. Unfortunately, happened overnight when this move happened. So that was gone. Now price is within this range. But what I like about it is actually the higher time frame where we are, and the potential move that we may have if actually price is ready to complete return. And I do like the top still. I still like this top. Eventually, price can go down and have some reaction if it wants to. That's a little bit of what I'm looking. I've been following the EuroCAD in here.
Yeah, that makes sense. I think, I mean, I'm also looking at that range, and if we break the range lows to the downside, I might be looking at a perhaps start entering a more of a swing position. But again, I think for me the play would be Euro USD to make it simpler. You know, not to have that double exposure to the euro. What are you looking at for gold?
Gold. Gold. Well, gold went a bit to the upside.
Yeah, I like the on the 4 hour. I like the it has like a higher low on the 4 hour. Looks like, I mean, I don't know. It looks quite bullish.
Yeah, starting gaining momentum. So I think based on the of what I've been looking at, even from last week, like last week we were somewhere around here, and then we finally make this push to the upside. So price managed to respect these lows in here, and it managed to make this move. That's basically the weekly candle is basically this. And I've been always talking about the same. I had a kind of two levels in here where you could find a little bit of selling pressure. Maybe already saw that with yesterday's move, and then I'm still looking for price to go a little bit higher, close to 3,445, something like that. Okay, 3,400 and something. That's the level that I'm still curious to see how gold's going to react. Is going to react from there, and it can bounce. It can still maybe bounce from here. Maybe then can respect his lows and go higher. So yeah, it can bounce from a few levels. If you look more into the intraday. Well, from the intraday, from what I'm looking at, price then broke the structure and created this level and price reacted from it. So maybe now paying attention to here to if price actually wants to go higher. But then we do have also this stop in here, and maybe we can even go a little bit deeper into, could go a little bit higher as well. We did manage to break a little bit of this structure yesterday's low, so we did manage to do that. But we may have still more room to the upside before actually looking for a short. Again, my favorite to be still above somewhere around here. Something to pay attention is if you do manage to break above this high in here, 3,395 or whatever. If you do manage to go above that level, I think we can go easily do this. So that may be an opportunity can happen here is a breakout and just trade out the way until 3,410. So maybe there's an opportunity in there. But before that, I can still see a little bit of selling pressure in there. Price can still go down after that. So it's a bit tricky. It's a bit tricky.
What do you think about? Have you seen silver? I mean, it broke into new highs. It's been how long has it been? 14 years, I believe. It's
2011.
Yeah, so crazy move for silver, broke out into a new all-time highs yesterday, I believe. Very, very impressive move on silver. So I'm thinking, is this a move that you want to be fading because it's so high? It's perhaps overbought. It's at resistance that we haven't seen in 14 years. Is this a place where it's time to sell silver, or is it a place where it's time to join the trend?
I was again, if you guys paid attention from what I've been talking about silver, anytime someone spoke about silver, has been looking for price to get to this 38, 39 before even looking for any sales. So for the last 2 weeks, price was ranging within this level, and I was waiting for the breakout, potentially to look for a short. I didn't really manage to get short yesterday. That's one of the hardest things, especially for someone that likes to look at price action and to look into detail in the lower time frame of where maybe the levels of supply or demand are, because I cannot go lower than the daily time frame into this level. Like I don't have data, at least on TradingView or whatever platform I use. This is 2011, so I cannot go on 1 hour or 15 minutes in there. If anyone has that data, and if it wants to share with me, I would love that. But I don't have it, so it's going to be always a bit trickier in terms of finding exactly the zone that I want to see price at least bouncing from, and to find some opportunities. But I've been waiting for price to fake out this top in here, and then I don't like the supply level. Okay, so around this level, I don't like supply level. I think you can have some reaction. We're already starting to have that reaction yesterday, but I think this is maybe just the initial reaction before price continues to move a little bit more to the upside. So one of the trades, or more traditional trades that anyone can look for after price breaks such an important level, and especially with such momentum, is basically expecting almost price to retrace back into where it came from, and then potentially having a more sustainable move upwards. So usually that can be this kind of opportunity across every asset. You're going to find that type of a move. I'll be tracking. Yeah, I'll be tracking just silver to see if you're going to provide me with any proper reversal pattern that actually lead into more of a bigger reversal.
Yeah, I mean, I think also, the obvious thing to do here is to wait for the retest of the previous highs, the breakout area. But looking at silver right here, I think especially if you look at like the 4 hour and the wick that we had on that 4 hour candle, and like how there's a lot of buying pressure coming in here, and I feel like the momentum to the upside is still here. And it's there's definitely a sense of FOMO here, but of course I'm not going to be following that. But I do feel like there's definitely a sense of FOMO here, and if I'm feeling it, a lot of others are going to be feeling it as well. And maybe it's just a matter of time for people to start piling into to silver on this move, because it is quite an impressive move to the upside here. A move that I feel also kind of went under the radar for a lot of people. I haven't seen a lot of people mentioning silver breaking the highs, not all-time highs, but high, very important high.
Yes, and I do like where the week actually reacted, and sometimes that's when you're looking at support resistance levels. Sometimes you think that the only level that price or for the support resistance kind of to work, price needs actually to touch that line. Okay, so that's basically the resistance. Then eventually when price breaks, people think that price has to go all the way back into this level. That's not exactly true. Like when price actually breaks this level in here, there's a sequence of moves in there that maybe can increase or can push the level a little bit higher. For example, that's exactly what happened in here. So we did actually manage to break out this previous level of resistance, but then price kept, like when price broke it, I respected the level straight away, and then it started kind of creating higher demand zones while taking the previous orders from there. So everything in here is compressed until finally price has a little bit of a move, and now it finally expands in here. So this is actually kind of more of the structure in here is connected with this support resistance from before. That's basically where the last decisions points were made with these spikes, and then price finally made the decision to create this move up in there. So actually like where this move reacted from, and price actually can continue to push a bit more to the upside. So I'll be looking at it as well, but I'm more into more of a short bias at this point because again I'm more a counter trend trader, but I need to see a bit more of a complete reversal setup in here. This was just initial reaction. I think we talked about that last week. Someone asked about what's the difference between a retracement or a reversal. I think this is just more of a retracement move before price continues, before a bigger reversal. I think that still needs to build up a little bit more before.
Okay, so you're thinking you're more of a that contrarian trader in you are thinking that you're thinking in lines of a mean reversion trade. Prices are very high. I might look at shorting this because I think it's too high. But then also you said that you're also thinking that the consolidation that you're seeing from price right now does show some promise for potentially moving higher, at least in the short term, right?
Yeah, I think we are still going to have a new high. Like from this move, I don't think this is still the top. I think price will eventually still at least fake out this top at least on time, if not more, before actually having a bigger move.
All right.
So yeah,
we have a comment here on we have a comment from Ernest asking about Euro AD. So I'm quickly going to get a short on 4-hour time frame. Got a sell on for you. I think this is a great catch right here for Euro AD. We do see that price broke below a significant level right here. This is a breakdown area. We did not obviously come up and test the breakout area, but we do see that we are having a strong 4-hour rejection right here. And if we add a horizontal level at the very top of that 4-hour candle, we can see that it does align with not the breakdown area. I mean, that's the area that kind of initiated the move. But you also see that 4-hour candle, it looks like that really is a stronger move that it looks like that's a breakdown, right? And that's a strong move, which tells us that once this level broke, that's when the majority of that move got initiated. And if we add a horizontal level kind of around this level like that, I think this is a really good area as resistance for Euro AD. And you can also kind of see how it does look like you have a trend that looks like this, and then it's sort of broken with this structure. So I think that is not a bad short. I think it's not a bad short at all. On the daily, of course, it's still looking quite bullish, but I would say that for an intraday trade, it's not too bad. But I would probably want to take profits around that level, because I think on the daily, it's still looking fairly bullish, and we're testing that daily 50 EMA right here. So I would be not careful, but I would probably take profits a little bit earlier here. So let's assume maybe you got an entry here. So if that's your entry, maybe you have your stop loss up here. I mean, we're probably just looking for like a 1-to-1 risk to reward here, but I think I would not be comfortable holding a short position on Euro AD further down because of how the daily time frame looks. It looks like it's in a overall bullish structure here. Maybe you can take a look at NASDAQ. I know that you look a bit on the you look at
Yeah, I
the
can take a look. I can take a look
yeah.
at indices. I know that someone is asking quite a lot about Nasdaq. I like to know is your thought process as well, like what you guys are looking at, not just our side, but I want to know if you are looking for long, shorts, like what levels are you looking for, because that helps us to have a more direct or detailed explanation of and to try to help you as well. In here, just to finalize, also because you look at the Euro Aussie, something that happened from last week and that maybe can potentially support a little bit, maybe a shift in here, is that last week we had the RBA, like the RBA, I mean, the Reserve Bank of Australia, keeping the rates unchanged. It basically surprised the market when everyone was pricing in a new rate cut, and they managed to sustain it. And that's basically the, I think it was somewhere in here at the beginning of that, one of these big red candles, it was that decision. So you can see that then it sustained that movement, and maybe there's a little bit of a shift of a trend, of a direction, comparing with the last month or so, for now. The reaction, as you mentioned on the daily time frame, it may look like it maybe price still wants to go higher, but it was not about the reaction where it reacted from, kind of this top, and you had all this liquidity. Like if you think about like accumulating a lot of liquidity or trapping some traders into the wrong direction, when it broke this strong level of resistance, it was maybe enough to now starting pushing price to the downside, and maybe can go maybe below this low or somewhere around here. Who knows exactly where the target's going to be? Maybe the short's going to be already from here, or we do still have this demand zone, this supply level in alignment with the previous level of support resistance in here. So maybe price still wants to slowly move like this, and then maybe can make a move. Who knows? But that's something to bear in mind, just to also pay attention to that shift of a surprise that maybe can or could be the catalyst, combining the technicals with the fundamentals on the Euro Aussie. But when you are looking at US indices, and that's an interesting one, right? So we continue to break out time highs. So we just had another big move. By the way, someone just passed. So Rain BFX, I think it just passed his 10K count. So congratulations, or the first phase of a 10K count. So yep, congrats on passing that phase one, and good luck for phase two, and hopefully we're going to get fund with us. But when you're looking at US indices, there was, I don't know exactly what happened, but overnight there was a big candle. Not really sure what happened at this time, but it's one of those big positions once again that happened at around 2:30 in the morning. So someone in Asia is really active in these last few weeks. Something to pay attention. Of course, CPI is going to be a big play today. Okay, so when you're looking at CPI, we are expecting, or the market's expecting, an increase on CPI data today. Like, so last month it was 0.1. This month is expecting 0.3, and at this point we are at 2.4. We are expecting an increase to 2.6. If this number by any chance is higher than expected, okay, let's pretend that now it's even 0.4, that pushes maybe to 2.7 in here. I think the indices are going to drop. Okay, I think that's going to be quite a negative sentiment, and I think we are going to drop because that can delay potentially the Fed to start cutting rates. Okay, the unemployment is steady. So I think the inflation is going to be in here the big factor for the Fed to cut rates. Most likely, there's not going to be any rate cut in July. Everyone is pointing to September. Like when you're looking at the odds in here, in July, there's no rate cut. But in September, that's when you're pricing in the first one. But it's still kind of a small separation. Okay, 37% of keeping it. This can change quite quickly if the CPI actually starts being higher than expected. But on the other side, if this number by any chance is not higher, but it's maybe 0.2 or 0.1, and the year-to-year CPI kind of goes down again, or it stays at 0.2.4, then I think we're going to have a massive move to the upside on the indices. So at least on the first reaction, then we'll see what happens. But that's,
we have a few
something
questions here on gold and what we potentially could expect from CPI and its effect on gold. So I think you would be a better person to look at this than I. But maybe you could draw two different scenarios. If the numbers are higher than expected or lower than expected, what do we think about gold going forward here with this CPI news event coming up?
Yeah, so I was explaining that in terms of the US indices, right? And if you think about US indices as risk-on asset, maybe gold can be a little bit of the opposite. Even though gold recently has been trading slightly different, not exactly just uncorrelated from the US indices or from the risk-on assets. But maybe, especially in the first moment, maybe in that initial reaction that we might have, again, if the numbers are lower than expected, which means good news, okay? So CPI not being as high means that it's actually quite steady, so it's good. And you may have a move to the upside on the US indices. And that may lead actually for gold to move to the downside in that regard. At least those those maybe first 5 minutes. And the opposite can happen. Like if the CPI is actually higher than expected, then you may have that move to downside on US indices, and maybe gold then is going to go higher. Okay, we may have a different movement on US indices and gold in the first instance of the move when the news comes out. So we can maybe expect that. And now we can maybe try to play out scenarios of where are those levels that maybe you want to be involved in to look for those trades. That's maybe something that you can try to expect. Maybe if you look at gold in here, yeah, so if the number is actually higher than expected, then you're most likely going to move down. So maybe around this level, you may still have price holding in here. Okay, maybe we can create some liquidity above the stops, and maybe then price can drop. But if the numbers are actually maybe lower than no, it was the opposite. Sorry. If it is higher than expected, then we can have actually that move to the upside. If it is lower than expected, then we can have a move down, right? So who knows if all of a sudden you're going to feel all this in here and getting close to this 3,400, close to this level today, or we may have a move to the downside and maybe we can go back close to this level, or at least maybe retest something in here. So those, again, when you're looking at big news, try to do the analysis first on the higher time frame and try to see where are the key levels of structure that you find, and maybe we can expect price to eventually move towards that direction, or to find either as a target or as an entry that you want to be involved in. Maybe ignore a little bit this maybe 5 minutes, 1 minute time frame of what price is doing right now.
Yeah, I'll, from a technical perspective, I think, from a technical perspective, which, we don't know what the CPI is going to do with price, but if we would not have any fundamental news or happenings, I would probably say that gold looks bullish for continuation to the upside. I would like to see gold push higher on CPI and establish the current levels as new support. If we do get that from gold, we can get a push higher and then perhaps hold this level. Like, for example, we might have the 3,370 area as new support. That would be great, and that would be really bullish, I believe, for gold. So right now, from a technical standpoint, I would be bullish on gold, but we'll see whatever happens here with the CPI might obviously change things going forward.
Yeah, that's going to be interesting. Just to find out, because I never really finished the US indices, and I don't know if anyone has actually mentioned if they're looking for longs or shorts on the indices. Because in addition to the CPI that we have today, there's going to be it's going to start today actually, and until maybe for next month or so, which is the Q2 earnings. Okay, so companies are going to start announcing their earnings in regards to the second quarter of this year, and that's going to be an important data or information that we're going to get, because one of the main reasons why you had such a big V recovery after the sell-off that we had in March, April, okay, the reason we had this kind of a move like this, it was because of the earnings. It was because they saw that the big companies, tech and so on, they are still investing a lot in AI. So the investment didn't stop or didn't kind of slow down, even with the fear of these tariffs that Trump was announcing and everything. No, the sentiment was still quite positive, quite bullish, quite optimistic, and then we have this big recovery. So if that sentiment remains now, most likely are going to continue to have a move to the upside regardless of the CPI data and so on, right? But again, the big tech companies most likely are going to announce their earnings till end of July, beginning of August. Today you're going to start with BlackRock, Morgan Stanley, I don't know, JP Morgan and stuff like that. But it's also important because those the banking sector usually they provide the outlook of what actually they are paying attention to. So they have the sentiment of the market. So that's going to be always interesting to see what is their outlook for the future, for the next quarter and until the end of the year. But yeah, pay attention to for anyone that's turning US indices, attention to the earnings that are going to start to be released throughout this month, because that's going to have a big impact as well on NASDAQ and the indices.
Yeah, we got a lot of important numbers coming out today, so definitely worth taking a look at. Right, we got Victor in the background as well. So let me know, Victor, if you're ready to join. Almost ready, he says. All right. Well, then we're almost having Victor. It's going to be an almost Victor stream. It's going to be Pedro and almost Victor looking at the screens here, looking at the charts. Okay, so yeah, it's an interesting market for sure. What's up, Victor? How's it going?
Hi, this is almost Victor. How are you doing?
Now that you're here, I'm gonna
What's
just
up?
transition over to your screen, and I will be back in a bit, guys. See you soon.
Thank you.
Thank you, Jonathan.
Thank you, Jonathan. I didn't have the chance to ask you how things are going. I will ask you when you come back.
Okay.
Pedro, how are you doing? How is everyone watching us today? What are you looking at in terms of opportunities?
Good morning, Victor. Welcome. I'm good, thank you. And then you can reply as well. How you are? How are you? In terms of opportunities, I'm trying to see if we do have potential reversals on the dollar. So that is something that I'll be paying attention to. It is a bit messy, this chart full of circles and lines, but it's something that I'll be paying attention to. If you do have shorts on the dollars, basically potential longs on the pound and the euro and so on. There are a few levels that I'm paying attention, a few levels that I would like to see broken as a confirmation, and a few scenarios that I would like to look in here. So yes, we will see. But I'm not looking at my chart in here. Yeah, you're looking at yours.
Yeah, let's switch to yours. Let's switch to yours because people are watching and thinking, what reversal are we talking about?
Yeah, so I'll be paying attention on the dollar index. Let me just try to see if I can move a lot of this to the left or the right. Yeah, maybe whatever, something like this. Yeah, so price is now reacting from an important high, in my opinion. So when you're looking at this structure, basically this is the separation. Price went down, created this top, and then kind of made another leg down. So I'm looking at this one as a key separation between potential price maybe trying to go higher, or maybe holding and potentially trying to go or continue to push even lower. So I'll be looking at that, and as a confirmation of that as well on the lower time frame, I'm looking at these lows in here. So if you do break these lows, I think price will want to go lower. So that will be something to pay attention. Now, it doesn't mean that price will keep respecting this level and moving lower. That will be one scenario. Maybe price breaks this and can go lower. Maybe kind of having this point here that I have, which can happen with the CPI as well, or even lower, even towards more of this one. However, another scenario that can even happen is if you do actually, one second, let's just zoom out this one. If you do actually break below that level, just maybe draw in white. If you do actually break below this level in here, yes, in my opinion, it opens door to go down, but we could even fake out this level first before then actually going down. And if you do break above this level, then in my opinion as well, it starts opening the door to go to the upside. So basically, you have in here those two confirmations: one maybe to go down, another one to go up, and then it becomes a little bit more of which scale or kind of time frame we are going to play out first. And maybe can even feel this one first before actually then feel this one later, which is happening quite quite often as well, and that will be the move. So I'm going to be looking eventually for shorts in here on the dollar index, either maybe somewhere in here, or even if you do have a push up again, maybe we can close this gap. I'm aware of that, or maybe we can even react to the little bit closer to this level, and then I'm going to be looking for the short regardless. So two levels that I want to see, two type of moves that I'm going to try to look for reversals in here on the dollar index. And it's going to be the play that I'll be looking for, and then transition into euro dollar and pound dollar, or dollar yen, or any pair related to the dollar. I'm going to try to find that exact setup, but as a long. What is your take? What are you looking for?
Yes. So I look at things through the lenses of EU and GU. I don't I don't pay too much attention on the dollar index, although it is a good barometer to see what the dollar strength it is. That is what it is, dollar strength index, right? So I could use that, but since I trade EU and GU directly and almost exclusively, it makes sense to just stick to these two. So I'm gonna switch to my screen, if that is going to happen. Let's see. Yes. So what I see is yes. Okay. All right. So I'm getting used to these the new platform. It's looking great, right, Pedro?
Yeah, it is. It is look really professional. To be honest, there's a big upgrade from the previous one that we had. So it looks amazing. I think Mike did a great job setting up everything. So it's perfect.
Yes, Mike is one of the huge assets we have in the team. All kudos to Mike for that. All right, so what I see is in the higher time frames is the following. We are reacting from a level or an area that makes sense on the monthly time frame. So I'm aware that this reaction might have more to it, meaning the retrace could be even bigger, because it's not only a big candle being retraced. We have more reasons. We have a enter order block on the monthly time frame, meaning that reaction, it doesn't mean it's going to reverse on the monthly time frame necessarily, but the reaction, we have more weight to it. We have more arguments to expect that this reaction could be somewhat more sustained than just a regular retrace of a big move. So that's one thing. On the weekly time frame, we actually also have a weekly order block being created, right? That's indication that these sellers are, coming to the plate. They may not be completely in charge, but at least in those two candles, they were, right? That's how engulfings are created. And this is a bearish engulfing creating that order block. And so I understand that either we're going to have a continuation, and obviously I don't know, nobody knows where the reversal will come back to go to the upside, to regain in the direction of the trend. The momentum is to the upside. The higher time frames, look at those big candles, big bodies, it's to the upside. However, the question is, how much of a retracement are we going to get before we continue? And so when I see this, and my question is, I ask myself, where is price likely to reverse from? We don't have anything on this time frame, on the weekly time frame, other than this order block way below us, and that's quite much lower. Meaning, I don't know, but it could just continue. It makes sense in terms of the order blocks in this time frame. So I recognize that. It doesn't give me any signals to go long, short, or to do anything, but it's just something that colors in the picture, the big picture, which is very important to understand where we are, where we're coming from, and what is the market trying to do. My understanding, giving or taking everything that I just mentioned into account, is that we are in a retrace and we're likely to go back bullish, right? Creating bullish order blocks and structures. But it's not clear yet on the timing. So if I go to the daily time frame, actually, Pedro, could I ask you to take over for maybe 1 minute while I come back?
Yeah, if you can.
I'll switch to your image screen while I'll be right back.
Okay, thank you. Yeah, so the question is what you can expect from the euro, and I do agree. Well, I just mentioned that on the dollar, I could potentially look for the sales, which if the dollar is about to sell, then euro could go higher. However, euro dollar is not exactly the asset that I'm looking to go for longs. I don't really like where the euro is reacting from. I don't like the price action that the euro has been creating in here. It's a complete different type of a move comparing with the dollar, with the pound dollar. I think pound dollar is at a much better level potentially to look for longs, even though there's still maybe need some confirmation here. Comparing with the euro, as you can see, euro dollar at least has been making a stronger move to downside, which now maybe too extended, and maybe can have now a reaction to the upside. On the euro dollar, we basically have just a range. Like almost price isn't really moving that much, and price is just stuck within here, which eventually maybe the next destination is to go towards a little bit more into this level, so there's a little bit more room to the downside, or even most likely, as Vitor is going to talk about, maybe can even go much lower back into this maybe daily level in here, I believe so. So yes, in terms of looking for longs, I'm not like, if the dollar is about actually to move to downside, I'm not going to be taking any trades on the euro dollar. Euro dollar is not going to be the asset that I'll be trading. And a key level that I'm still paying attention here on the euro dollar is this one, that can still hold price down as well. We may even have another spike on the euro dollar in here, just pop up, and maybe price can continue. I still like this supply that's been quite similar from the previous moves that we had on the euro dollar. Welcome back, Peter.
Thank you for filling in that short little while. So I was let's continue with what I was talking about. We were at the weekly, that we understand that we're expecting that move, right? That the end of the retracement, but it's very difficult to. We don't have any indication yet of where is that going to be and how long it's going to take until that moment. So looking at that, going to the daily time frame, I come to the same conclusion. You see, we have one big handle, or one big push with no order block left behind, right? Other than the beginning of it. So it doesn't give us any indication as to something where could price potentially reverse from. Of course, you can go to take the 50% retracement of that move. In the absence of anything else, you could understand that could be a reason or a level that the sellers would be stepping back a little bit, buyers would be stepping in, and you could see a little pop. But that's too weak of an argument. I mean, I would use it as a target, but for a reversal signal, I don't think that's adequate. Okay, but other than that, we don't really have anything. And I don't like looking at to the left, because we don't have anything. Of course we do have structures, but they're too far away for me to assign them any weight for how, as a predictive value for where price would likely to reverse from. So where does that leave us? We don't have anything, right? As I said, the order block on the daily time frame is within the weekly, so it didn't help us. And we have a bearish order block that was created, which is within the weekly. So basically, the daily refines those weekly structures, but it doesn't help us in giving us any other area where it would likely reverse back or even continue from, right? The continuation is within the weekly, but it's not. It is a refinement of the weekly, but it doesn't tell us anything different than the weekly is already telling us. So the daily, basically, and in terms of macro perspective, looking at the as a swing trader, I don't see any opportunities currently on EU. I'm not looking into today to do anything on as a swing trader. So I'm not going to be holding anything longer than just for today. And if you look to the H4, considering that we have, of course, we have this retrace, which is at full speed, meaning it has everything it needs to continue the downward path, meaning downward structure, the downtrend, lower low, lower highs, and really nothing. There is this order block, yes, and we did have some reaction from that order block, but it's not that significant. It's not a entry order block on a quasi. It's not a fresh order block. So it's there. It's going to do its thing, but it's not going to really. The chances that order block is going to reverse price is very slim. Actually, it has already been invalidated by that H4 order block, not order block, candle that was closed not long ago, right? So that was yesterday in the afternoon. So actually, we could just take that away. So what are we left with? Let's zoom in, since we don't have any quasis on any structures to the left. So if we look at this, we are interacting with a fresh order block, a bearish one, which is in line with the direction of that retracement, that trend, which is a good thing. That increases the possibility or the probabilities that will be respected eventually. And if we go to the H2, there isn't really a lot to be said other than that order block that I see there. I suppose you guys also see. Let me show that. We have an outside bar, which is this one. Very nice one, but I prefer to use the H1 that I have. I'll mark it, but I prefer to use the H1. And where's that H1 coming from? If you can't see it, just be patient and I'll show you. It is this one. I know it looks not evident, not clear, not so obvious. But if you follow a strict rule-based system, how to break down these patterns, it doesn't matter how it looks. If it fits, if it meets the criteria, then it is valid to be used, right? And what I mean by that is we do have an established uptrend. As you can see, higher highs, higher lows, and we break that neckline. See that? We break it, we broke it right there, and we came back and we did have one order block. Actually, it's quite wider, but since we have an H4, it doesn't matter. That part that is outside of the H4 is not overlapping, so I'm not interested in that part. So what we do have is this order block that has not been, yesterday I was talking about this on the workshop. What is the invalidation rule, at least according to me? What is the invalidation rule of an order block? And it depends on the definition, if it's a fresh one, entry order block on the quasi, whether or not all of that. But in the case of a quasi, it's a close above it if it's a bearish one. And we did not get that. We did not get a close on the relevant time frame, meaning the H1, a close above that area. So to me, that area is still tradable. It still be useful for a possible alignment. And we did get that alignment. We do have that alignment with the H4. And I mean, this order block has been there for how many hours now? From Friday, night, many days now. And you can see how the market reacts to it very neatly, very respectfully. And today, still the case, right? So, and that is why I trade these overlaps. Look at that. Look at that beauty of a area on the 5 minute this is, but you can see that on multiple time frames as well. Price comes in, touch has interacted a little bit with that area. And we do have entry order blocks from the left, quasis from the left, but from local quasis, yes, we also had on the lower time frames reversal patterns being created, entry order blocks being displayed. Having some, let's see. I think there was some kind of an update on TradingView lately because it works a little bit different than usual. But anyways, that aside, to me, on the lower time frame, you find those reversal patterns. In my case, it's a quasi, but you can find, it doesn't always move using quasis. Reversing using quasis. Sometimes it's double bottom, double, all kinds of patterns are useful. And this one, you can see how beautiful. This is beauty. This to me is, beauty is in the eye of the beholder. Maybe you don't see any beauty in this, and I respect that. But to me, this is beauty. So look at that, the order block, how market comes back, reacts from it, and off we go to the downside. Isn't that, I don't want to say nice. Nice doesn't start to describe it properly. This is just beauty, okay? If you're not agree, that's fine, but I'll call it beauty. Tell me in the chat if you don't agree. All right, so I'm checking the chat right here. Vinicius, no, it wasn't a parcel. but you're very close. Some errand I had to take here, just making sure and the house doesn't burn down.
It was he got the list of the moves for today. What the CPI is, Victor already knows the numbers. Okay, he got the envelope. That's just for specific for market makers. Okay, and Victor is one of them. So that's kind of the better.
Thank you. Born in 2944. You're born in the future. I like that. You're from the future. All right. So order block to order block. Yes, that is Vinicius. That is that's the one of the ways I break down, right? Saul, our CEO, will say level to level, right? That's how he approaches his scalping. And I'm really, if you think about it, what I'm doing is no different. It's from order block to order block. And since order block are a representation to me of supply and demand, it's roughly the same thing as with anyone who would be trading supply and demand, because obviously I use other tools, other patterns, and perhaps other entries and whatnot, and alignment and all of that. But the basic premise is the same. We expect the market to do a certain thing when it reaches supply, and a certain thing when it reaches demand. And that's it. And whether you go for the next level or a couple of levels up, that's your preference in terms of risk appetite. So that's Stephen is agreeing with me. I do like that, Stephen, my man. Thank you for that agreement. I think you are absolutely right for thinking this way. All right, Manish, and we have Marina as well in the chat. Hello,
Yep.
everyone.
Hi, Marina.
Thank you for being here. Manish saying the main sauce come from order blocks. Couldn't agree more. Order blocks and quasis. I mean,
Yeah.
those are the two ingredients of my cooking recipe. So whatever comes to the plate is based on those two things that are, whether it's on the grill or boil, it doesn't matter, but it's using these two ingredients, quasis and order block, and you can combine them. They're very versatile in the trading kitchen. Just try it out, you'll see. Be if I would say something, I would say like salt would be the risk, like you want some risk but not too much risk, because they'll just kill the recipe. So
Yeah, it
be
can be spicy or not.
beg your pardon.
You can add some spice into it or not, like
Yes,
if
you can
it's
add some
necessary.
spice right there, but not too much. You gotta be just lightly in there. Perfect. All right, so that is on EU. So as you can see, I'm ready to look for that uh, extra signals on EU, because I understand that this is on the 1 minute, right? You can't see it on the 5 minute, but my entry was on the 1 minute. And I understand that this can have multiple entries, so I'm still looking for more entries on that. But we can check the chat if there's anyone else wants us to look at perhaps GU or gold or any pair of your liking. We're here to serve you. We are here
Yeah,
to share. Go ahead.
yeah, I'm curious about pound dollar. I want to know your take on it, because the pound dollar is slightly different than the euro dollar at this point. Like the last few days, pound dollar has been moving more steady to the downside. Euro has been being stuck in that range. So I'm curious about your take on the pound dollar. If you think this is a good level potentially to look for longs, or if you think that the pound dollar is going to continue also to navigate more to the downside.
Let's look. Let's take a look on the chart. Let's see. GU, yes. We have CPI coming in. For those who wondering, actually, this is so cool. We can actually keep everyone well informed of the high impact news, and also some news coming out. Perfect. All right, so that is actually last minute news, right? It says EU has no intention. What did it say? No intention of
Yeah, I think it said there is no
any
intention
trade
of.
countermeasures before
Yes,
August 1st. Okay, I
exactly.
see. Okay, that is good, I suppose, to calm down the markets, because all these ultimatums and tariffs negotiation, they're very good actually for us, but too much of it is not great. I mean, when you're in a trade and the market starts doing all kinds of weird stuff, you don't want to be, that's not the ideal place to be in. All right, for finishes, you're absolutely right. No salt, no taste. Yes, no risk, no taste. Indeed, you gotta have some risk in there for sure. Otherwise, it's not gonna do anything for your bottom line. In this case, your taste. GU. All right. So GU has a, not surprisingly, but has a similar higher time frame. It's only much bigger. The bigger the order block is, the less um, you know useful. It's still useful, but it's less useful than a tight area, right? Because for a trade, the wider it is, the more chances you have of getting triggered and getting a signal that it's not going to be the signal. So your win rate, actually, the wider the order block is, the lower the win rate could be. So I don't like the fact that the on GU, that order block on the monthly time frame is that wide, but it does tell us something, and it's not too weird, or it's not weird at all, that we are now forming, or at least showing, this is only the 15th day, calendar day of this month, but it's already showing a bearish engulfing. And the other thing that also is indicative of this order block being something significant is that the other area within that smaller slither of an area, that is the weekly order block. You don't see it here yet, but I will zoom into that, and we will be able to see. Actually, I think I can indicate it. If it's not already indicated as a weekly, it should be. Well, it went away. Doesn't matter. Anyways, all right. So that wasn't what it was supposed to do. Okay. So it changed. Let's see. All right. So that order block is, it changed somehow. Instead of taking it, okay, now I see it. Okay. This is the order block on the weekly that I was mentioning, and I'm going to switch back. So because I do like it to see it from the monthly time frame, and you can see how these order blocks, you can use them in multiple time frames to pinpoint the actual era. This is exactly the whole idea of using top-down analysis, using a multi-time frame analysis, because the monthly is the bigger order block. And it tells us that we can at least expect a reaction from this area. And when you use, on top of that, you use the weekly, which tends to be, because it's a lower time frame, tends to be a more refining of the higher time frame. You can see how, as soon as the market reaches that order block, it reacts. That's the whole thing, right? If you didn't have the weekly, you would have to wait the whole area and then wait for that order block to be created, meaning that's you're getting into the trade much later. But if you're using these smaller time frames, you can then get in much at a better timing, much less stop. Less stop meaning higher volume, bigger size you can go in, with this basically the same idea, just being able to bigger size, bigger profit. All right, so that's what it says. In comparison to the EU, obviously the monthly isn't that big, but still the weekly comes to the rescue in that case. As you can see, the picture is a little bit different on the GU compared to EU. While on EU we had a fresh weekly order block being created last week, we don't see that on GU, right? So that means that based on this, the chances that price is going to continue higher are a little bit higher, right? The bias is a little bit to the upside in comparison relative to EU. Not only that, we are currently in a fresh order block being retested, which is that weekly bullish demand area or bullish order block. Also demand. There you go. That's the area. Going to the and that's it. That's the reason for me to look for an entry. It is on a monthly supply area, but that's quite wide, right? It doesn't bother me as much. And since I'm not targeting something that is much further away, I'm just targeting to the next level. It's fine. It's fine because I do know that the market will do, within this bigger area, it can do all kinds of movement as it is getting out or being reversed from that structure. So that is the weekly. The daily time frame is telling me, let's see, it's telling us that we do have an order block there. It's as a refinement of that weekly. That's beautiful. That's good. The only thing is that this order block is not part of a quasi, right? It doesn't fit the pattern. Although it's beautiful, I like it. Price, that's where that's the ignition structure that started that whole movement, and it's right there. So I am interested in it, but according to my trade plan, I'm not going to be trading in as a daily signal if it reverses from there. So I'll have to wait, and because I don't have anything on the daily, that means that my weekly fresh order block that is now being retested doesn't have alignment, meaning the macro level, same at EU, I'm not going to be holding any trades for as a swing trader, right? So next thing would be then the H4. And on the H4, do we have a quasi? Let's test that. Yes, we do. But that entry order block is a little bit lower. So based on the whole structure, I'm still waiting for price to reach this. And if it doesn't reach it, then I'm not. Based on that, from the structure to the left, I'm not interested, right? I could still get a signal, but then it will have to be something from recent price action, and we'll take a look at it to see if that's signaling or not. Let's see. So I'm still waiting for price action to reach that order block below us. It hasn't done that yet. In the meantime, let's see if we have anything on the H4. As you can see, very, very simple. Just using order blocks and quasi.
Mhm.
Nothing. It's not rocket science. It's not high mathematics. Just very, very simple. All right. So, and while you're listening to me, consider liking this stream and subscribing to our channel if you're not a subscriber yet. If you're watching, I assume you're enjoying, you're getting some value out of this, then by all means, do consider those two actions. All right, so what do we have? We do have a fresh order block right here. Hasn't been retested yet. Other than that, I don't see anything else. We have order blocks that were previously there that has been invalidated. And we do have an order block here, which is still fresh. Let's see. That is this one on the H4, but we're not there yet. So there isn't actually anything for me to trade from. This order block on the H4 is no longer fresh. It's still there. So I still want to know that it's there, but it's not the area that I'm looking for as the potential area to trade from. Let's look if we can see if we can find some kind of refinement on that order block. That is this one, that's H4. I don't see anything here. This isn't anything I can trade either. It's not part of a quasi, not fresh, so I don't have anything, and that's why I've checked this in earlier today, and that's why I don't have anything waiting to happen bearishly. If anything, I will be wanting to consider a bearish order block, this one as a possible scenario, but it still has a lot of work to do, meaning it still has to create the whole structure, that H1 signal or H2, meaning it could still happen today, but I don't see it happening. I don't think that possibility is likely to happen, but we'll see. And let's see if we can find anything on the buy side. currently we're in the middle of these two order blocks, so I'm not interested in going long or short at current levels, right? You don't want to be getting in the middle of the range, because you're in no man's land. It can go up and can go down without breaking any structure, without doing anything. So that's the you don't want to be going there. If you want to go short, you want to be doing it at a place of supply. If you want to go long, you want to be doing it at a place of obviously demand. H2, we do have a outside bar here, right? So if price comes back, that would be the place that I would be interested in. Let's see on the H1 if you can get some more reversal. Actually, there is a quasi right here. I like that. Quasis are a bit more selective, so when that happens, I'm interested in knowing where they are, because they can give us some very nice entries. This is on the H1, and we do have an entry order block, which is this one. It's quite big. It doesn't help us. Look at these two. This is the H4, H2, and this is H1, right? It doesn't help us. Even though it's a quasi entry, it's not going to help us, right? So I'm going to mark it, but I'm not going to be using it. So the area will then be defined so far by this outside bar. Let's mark it like that. There. And the lower border, right? That's where we have the there we go. That's the area that I'm waiting for to take along. If and when it comes back, that's going to be the area, and we can fine tune this on the 5 minute. It is against the trend, so you got to be careful, right? The momentum is still, the hourly trend is still, it's trying to reverse, because we do have a quasi on the H1. But if you go higher time frame of the H4, this isn't anything yet, right? It's still breaking down, making lower lows and lower highs, basically. So you gotta watch out for that fact, because that tells us that it's not very, very likely to reverse. But there's no other way. If you want to catch it and have these huge risk reward ratio trades, then or high R trades, that's the way to go. You want to be doing that. Let's do on the 5 minute. You want to be taking that before the higher time frames change as well. So what I see is that we do have the same place as the neckline for the hourly. That's the neckline for the 5 minute as well. This is the 5 minute time frame. And let's see, we have one order block here, which is outside of the area of interest. So I'm not interested in taking a trade here. And we have, let's see, we have a couple of areas. I think it's going to be just one big area as well. And yes, so that's going to be the second one. And we don't have a third one. So far, these are the places that I want to be taking long from. Now, actually, not these. It's singular. This is the only place so far on the 5 minute that I will want to take the entry from. If price comes back, and it does give me my signal, this is that's the area that I want to be going, putting my stop below that, the whole area, and targeting. Let's see what target I could be looking for. Just the next area. And obviously we don't have anything except that. So I'm going to be putting, in this case, I would be putting my TP, right before that order block, to begin with, without having more information. Maybe by the time it signals, we have more information. I can maybe, in terms of time, maybe some other structures, I can have a better TP, a more adequate TP. But that's it. I do have a long area, but its price isn't there yet. It's just a possibility, just a scenario. So yes, I hope that helps you. I'm checking the chat to see what you guys are thinking.
So yeah, that's a good analysis. I kind of have a similar idea than you. However, you did started with the vision that on the 4 hour time frame, for example, you still have that on the daily. Maybe you still have the order box right underneath that, like that rectangle underneath where price is currently.
Yes.
However, then we do have more currently on today's price action. We may have that level. I'm actually looking exactly at the same zone, the one on the 1 hour time frame. we will be taking that trade regardless if price on the daily time frame still want to go to touch that daily level, or are you going to be waiting just for price to get to the daily level before even taking any longs in there?
No, the thing is, the fact that we do have a structure below us, right? This one, which is very interesting. If we get there, and if we get a alignment and everything, then I want to hold these kind of trades because the structure its base is much bigger. I can confidently hold this for a bigger move, even though it's an H4, potentially for a swing trade. That's one thing. But that doesn't mean it's going to reach it now. We don't know when it's going to reach it, right? So it can just as easily go higher before coming there and then trigger me, right? So the fact that we have an area there doesn't tell us it's going to necessarily go there this time around. It does, I know it does attract it as a magnet, but it doesn't always reach it right away. Sometimes it reverses right before it. So I'm not going to be anticipating, thinking just because there exists an area there of interest, I'm going to start doing my trading decisions based on that. So I'm going to wait for the area to be interacted with, then to take a decision based on that. In the meantime, I'm going to treat this area, it's quite small, but this area that basically is the basis of the setup, I'm going to treat it on its own, understanding that I don't have anything on the on the daily time frame to hold it longer. So I'm only going to be taking it for the day, the session. So I'm just going to take it one order block to the next order block that makes sense. And in that way, I'm trading, on the shorter term, I'm taking any possible reversal and any pop, and I'm still on the line. I'm still looking for that structure, the one that we both are looking for a much more sustained, because I understand, since this is within a daily order block, that reaction potentially can be much bigger. That can be something I can hold a couple of days. And do we have a weekly? I think we also have a weekly. Yes, we also have a weekly. So that can be a huge trade. You have a weekly, daily, and an H4 telling us that's a great area to hold. So if I do get a signal, I want to hold that as long as possible. But we're not there yet. Got to be patient. We're not there yet. So I'm going to be trading both setups separately, basically.
Okay. Yeah, sounds good. Sounds nice for managing expectations, but yeah, being aware of the bigger picture maybe, and just trading what's in front of us at this point. Yeah, maybe I can just take a look into pound dollar as well, just to give a bit more of my take. Then some people also asked about some yen pairs. If not mistaken, Vitor, I don't need you to move to my charts because I cannot do it.
Yeah, no problem. Before we switch, there is one person, Beverly Jacobs, asking, "What is a quasi?" Would you like to do the honors, or shall I?
Yeah, you can explain just quite quickly.
Okay, perfect.
And there was a second person, so I think is the first time that is joining. Francis also saying that he trades order blocks, and also asking what is a quasi. So we have two questions about a quasi.
I see. Let's see. We have Francis as well. Yes, thank you both for the questions. That is exactly what we want to be having. You guys asking us for anything that comes to mind, trading related, of course. And while I'm explaining this, don't forget, if you like this, you like the fact that you have traders, authentic traders, profitable, consistent traders that are able to answer you, in the chat, tapping into their experience. If you like that opportunity, why not like and subscribe? So, all right. So the quasi is short for Quasimodo. The character in the Disney film. Well, actually, it was a novel before it was a Disney film. Doesn't matter. That Quasimodo, that's where we call it quasi from, and I'll tell you why we're using that Disney character for a chart pattern. But let me tell you first about the popular Head and Shoulder. I'm not talking about the shampoo. I'm talking about this chart pattern that has been I was gonna say fighting dandruff, but no, I'm just saying this is the reversal pattern that is very popular, and it is for a reason very popular. And it is a pattern where you have a trend. In this case, it's an uptrend. This would be the head, and it makes the textbook example is very symmetrical. In reality, it isn't that as symmetrical always, most of the time. Where you have on each side, where you have a shoulder, left shoulder, right shoulder, nothing too fancy. And then you have the basis, right? The basis of that pattern. Once it breaks that basis, that's the indication that the market has, broken structure and the pattern has completed. And you can assume, according to the textbooks, that the market is going to continue lower, right? That's the head and shoulder, right? It's a reversal pattern very quickly. So, and the difference with a quasi is that because unlike the head and shoulder, which is very symmetrical, the quasi isn't, right? So while the tops of the shoulders are typically similar in the head and shoulder pattern, on the quasi, they don't have to. It can be something like this, right? Not at all, or any other combination. And not only that, at this point, the basis could be completely different, something like so, right? It still doesn't look like a head and shoulder anymore, but it is a variant of that head and shoulder called quasi. And that's what we both, Pedro and I, we both trade a lot. So basically you have double the skills here at your disposal. All right, so this is the quasi. It's a reversal pattern, very easy, and it is left shoulder, the head, the neckline, which is based on the lowest point between the left shoulder and the head. That forms the neckline. Once it breaks, you have the activation of the quasi, and you wait for the return, the formation of the right shoulder to get in. At least that's how I trade it. Pedro has some variation how to trade it. He is much more versatile. He enters right shoulder, on the head, on the shoulder, on the hips, on the foot. He enters lots of places, but I only trade the right shoulder, which is this. Right, so I anticipate where that's going to be. Obviously, I don't know, but I use order blocks to anticipate that reversal, and I try to get in before the pattern is actually formed officially according to the textbook. I'm already in, and depending on, it doesn't matter where I put my stop, but above the whole structure is a good place, and I target something on its way to the lower time frame. I mean, the lower point of this pattern, and if not, something even longer, even further away, if I have reasons to do that, meaning higher time frame and confluence and all of that. That's it. That's the quasi, right? I hope I did it as quick as you guys wanted.
It's much faster than last time. It's an improvement.
All right, so let's switch to your. Where is yours? Let's find. We're still finding our way around here, but don't worry, it's all very professional. There you go.
There you go. Let's just take a quick look at some comments, because we have been explaining pound dollar in such detail. I think Siad, I hope I'm pronouncing your name correctly. He asked about if there is anyone at the 5ers that will reach the fixed salary level. Maybe. Personally, I don't know any. That's Ezra's for Bon Dia. But yes, I'm not really. I'm not sure. Perhaps he did. At least I don't have that information, either as a yes or a no. So I don't know. But maybe some people may have reached those levels. I don't know if Vitor, if you know or not. But I don't have that information.
You got to understand, I'm not gonna confirm or deny anything, but we understand that there's also privacy issues, right? If that person doesn't come forward, then we're not able to disclose anything. Go ahead.
That's true. Then some people, just again, it's not a stream we do if someone is not asking about your mask. So the mask is basically how Victor gets his signals. Okay, so that's the way that he does. You think he's looking at the charts? Is not. Is Victor getting all the information? Kind of I don't know, agency style, like MI6 and stuff like that from his mask. And that's when he decides to go long or short. But it's basically, again, we have been talking about so many times. I think it makes Victor even kind of a unique, a unique, beautiful kind of characteristic. But I think it's also about his own privacy. So he doesn't really want to let anyone knows how beautiful he is. And
Don't make me blush, Pedro. Don't make me blush.
and that's it. Yeah, no, we're looking at the charts in here. So pound dollar, let me just look into pound dollar. By the way, Abdullah,
this is the reason. Everyone, sorry to interrupt you, Pedro, but this is the reason.
Yes,
this is the reason. Man, you guys caught me. That is it. Sorry, go ahead.
Yeah, Abdullah mentioned before that he's looking for shorts on pound yen. I'm actually curious to hear about his ideas on the yen pairs, because he's always quite certain and kind of accurate on these yen predictions. But when you're looking at the pound, so yes, pound is approaching a little bit of this daily level, right, that we just basically talked about. And it's slowly. It's been slowly moving to the downside. So it's the second time that around the London Open you have a push up, but then during the Asian session, or not Asian session, during the US session, then you have another leg down. So that was yesterday, London, move up, then down, and now today again London, another buying pressure here, and then we'll see. From the way I look at it, this volatility for me is one of the last barriers that can still hold the pound. If you do break above that level, I think we can move and maybe can even correct last week's move. Okay, so again, in regards to the pound as well, is that we are not going to only have CPI today in the US. We are going to have also CPI tomorrow morning in the UK. So if by any chance you get the direction correctly, and if both move in the same side, you may have a really big move happening on the pound. Okay, so be aware of that, because today is one, and then tomorrow 7 a.m. in the morning we have CPI again in the UK. But yes, the way I look at it, let me just go back into the weekly time frame. We may have a correction, or price may retest the previous weekly candle to the upside. Who knows? If we do actually respect this level in here on weekly, this basically have a massive weekly candle in here. Then you have 1, 2, and now we're creating this third one. And who knows if this weekly just corrects completely out that move, and then we come back into the top again. So that will be something personally I'll be looking for. If by any chance I'm looking for any longs in here, yes, maybe still need to break this level, and then maybe can still go a little bit deeper into that heavy zone that Victor also had a little bit in here. But by any chance, I'm going to be looking for a target somewhere close to this level again, if the move happens. However, in the bigger picture, and I already mentioned that last week, when you're looking at the pound, I'm looking more of this range. So yes, this is a daily level. Price may actually bounce from here, but this is not even my favorite. I think price eventually can fill out this price. What I mean by that is I'm expecting, before price breaks this top, I'm expecting price to get closer to this bottom in here. So that will be a bit of the sequence. So if price by any chance actually still even goes higher in here, I'm potentially still going to look for shorts from the top, eventually towards that direction. Or something that price could do even is maybe take this low, just collect liquidity from here, then go higher, and then finally go down. So there are a few scenarios in here that the pound can play out. I'm going to be looking at some of them. At this point, yes, I'm looking more for longs and shorts. Now that we're approaching this level, until eventually when price goes up, I'm going to be interested in shorts again on the pound. And I like exactly the same level. When you're looking more intraday, yes, I do like this level in here. It's exactly the same as Vitor mentioned. Somewhere around this level, maybe we can have that move, price hold, and then pushes higher. We'll see what will happen. But for intraday, yes, I still like this level as well. So yeah, that's basically what we have on the pound. I think it's completely different from the euro dollar. I think it's maybe more attractive as well, even for tomorrow's CPI data, that maybe can be in the right direction, and maybe can have a really good move. In 24 hours, when you come back in here in the stream, maybe price already moved quite a lot in the pound tomorrow.
Yes, and a reminder, we now have it on the screen on the sides where you can see, there you go, the CPI, Canadian CPI, coming out, and the dollar CPI as well. Take that into account in your risk, strategy, risk management. Because if you're in a high stake account, remember, you cannot get in 2 minutes before and 2 minutes after the news on the high stake account. If you're in the hyper growth or boot camp, then it's okay. But if you are on the high stake program and you get in, during that 4-minute window, the profit will not count towards your target, but the losses you will still absorb. So it doesn't make sense for you to enter any trades while in that period. Just take that into account. You're not going to lose your account, right? But it's not going to help you. It's only going to hurt you. It can only hurt you. It cannot help you. So stay clear of that. It's no good. Not good to do that. In terms of risk management, it doesn't make sense, right? You have no upside and you only have risk. That's a trade you don't want to be taking. So let's see. Someone asking for giveaways. Chaudhry, I understand you want giveaways, and we do give these accounts away, but the best way is within your hands. If you want to have a chance of getting accounts for free, the best thing you can do is hit the like button, subscribe to the channel. The more we hit these milestones, the faster we do, the faster we will have these events, which we have on quite regular basis, where we give out for free accounts, and you could be the next winner. All right, so
Yeah.
let's see.
I'm just looking at the end pairs because I think the end pairs are getting into interesting levels as well. So the end index has been moving to downside quite aggressively or quite nicely from the last month or so, as you can see here, like which a bearish move is something that we talked about as well, and it's starting to get now close to the bottom of that or to the lows that initiated that move. Right, so basically we are coming back into this level. After this push up, now price is finally coming all the way back in here, and maybe can have a little bit of a turn in here on the index, which eventually can push the individual yen pairs to the downside. So when you're looking a bit more into the time frame, so we have this was a reference, and then maybe have a little bit of this next month in there. But when you are looking into more of what's going on in the last few days, we see that price is starting to slow down. Like you can see this type of a move, price went down, kind of managed to come back into the supply, and now this type of a move like this, but still not really managing to break any key level or opposite high. To actually start breaking structure to potentially move higher. So it requires still a little bit of patience when you're looking for potential reversals on the end pairs, because I'm using now this reference on the yen index. So this is the index of the yen pairs, and I'm going to transition a little bit into the individual yen pairs. But something that I would like to see in here is the situation where we could potentially fake out that low, and then maybe we can have a push higher, maybe even towards this level. Maybe this is going to be the first target that you can, or one of the targets to pay attention to. The price feeling all this moving here, and maybe can get some reaction from that level. So if I'm using that information, then when I'm looking at the yen, at the dollar yen, as you can see, dollar yen is reacting now at this top. Okay, so again, we had a really strong level of support created at around this zone several times. Price coming back, retesting, pushing higher, and the last time that price visited this level, kind of had a really strong selling pressure. But you may go higher. Actually, the way I'm looking at this is that we already broke this top in here. Yes, then we respect it almost as Quasimodo, but we didn't really maybe manage to break the previous low, or maybe did in here. But I'm looking even for the dollar yen actually to potentially go a little bit higher, maybe towards now this next level. So I'll be paying attention to see if with the dollar yen we may have a little bit more of a push to the upside. So many people may be tempted to try to short already in here, and maybe it works. But if we do follow what the yen index is doing, maybe can push a little bit higher before actually having that push down. And that's what I'm going to be looking for. I'm going to be patient a little bit with the yen pairs. Maybe try to attract people into the wrong direction, already shorting here. Maybe take the top and then maybe have a little bit of a correction on this move, which is basically this one as well, going a little bit lower, before go up. This one could go a little bit up before it goes on. Of course, dollar yen also is going to be affected with the dollar. So today we have CPI in the US, so of course there's going to be some movements in here. But even when you're looking at euro yen as well, euro yen has been quite strong. It's approaching also this daily, weekly level. And it's something also to pay attention. Also, as prices continues to push higher, you can see how price is slowing down. So I think we may be getting closer to potential reaction or kind of reversal in here, maybe to even come back into this zone in here as well, or maybe in there. So yes, yen pairs, for anyone that looks into reversals, I think we are getting closer to an interesting level that you can have a good opportunity after these last few weeks or a full month of price moving just in one direction. Just wanted to give that bias into for everyone.
Thank you, Pedro. And we have come to the end of this segment. I was going to say sadly, perhaps that's your sentiment, but don't be sad, because we have in the background, we have the man himself, the man with an E, the man themselves, Mike and LJ, coming up in the next segment. Are you guys ready? Yes, they are. So stay tuned, and we will be right back.
Hello. How is everybody? Happy Tuesday.
Hello. How are we doing, guys?
Hope
Doing
everyone
well?
is well. Let's get some.
Good to see you all.
Let's get some ABL mood going. No,
Yes.
no, that's a bit too low. No. Oh no. Okay. There we go. That's more like it. All right. Let's just bring the volume down a bit. LJ has discovered the ideal volume level.
Apparently 4 is perfect, yeah.
4 is the magic number. I thought 3 was the magic number, but hey, 4 will do as well. No problem. How is everyone doing? Hope everyone is well. Dwiz Chowdhury, you if you are 15, you can watch for entertainment and educational purposes, but don't go buying an account, otherwise you'll end up getting banned.
I would say spend the next, if you're actually 15, genuine thing though, spend 3 years learning, dude.
Yeah.
Pick up all the stuff.
Yeah.
And then as soon as you're legally able to open an account, you'll have 3 years above everyone. You'll be able to make good decisions off the bat, and you'll clean up. So
yeah,
that honestly impressive that you're here and looking at this stuff at that age. So to be fair,
absolutely. Just don't ruin it by trying to get in before you're legally allowed to, because you just blacklist
take it steady
unnecessarily.
Yeah,
you know?
The biggest thing is take it steady. Don't try to rush. Don't get hyped up in the Instagram-y nonsense of people buying extravagant stuff, whether it's watches, cars, luxury hotels, all that nonsense stuff. All right. Take it steady, because normally that stuff is very fake. There's a lot of other stuff going on. So yeah, dude, if you do that, you'll be set. You'll be set.
Okay, how can I remove Jonatan from here and remove him with his sound effects?
I was going to say I thought that was you.
I'm pretty sure. No, this is not me at all. I'm pretty sure Victor and Pedro didn't get this kind of trolling with sound effects. So we bring on the music, we bring on the vibes, and then Jonatan's suddenly throwing in all the sound effects as well. So
he's in here to try to
sitting in there. So.
So yeah.
we have got a slight technical issue with Griff. All right. Well, on that note, let's. Oh, you're not sharing a screen. Well, that really made me look unprofessional. There we go. All right, never mind.
Let me share.
Let's just go to mine while I try Griff.
Yeah, I'm used to this being automatic from
there we
ABL.
Go.
We're just set up.
Right. Okay. If you talk the boys and girls through your lovely charts, and I'll be back very shortly once I've managed to pull in Griff into the studio.
No worries. Go for it. Right. I'll say as well, by the way, guys, unfortunately right now, how we have it set up, I can't pull up your guys' comments, so I'll just read them out. But hello, Venetius. Thank you for my lovely art comments. Beautiful to see. The bad player was saying, LJ, heard you use your instincts. How did you learn to trust it like that, or is it associated with your strategy? I'll go over that first because I will say that's in part to do with, I guess there's a strong portion where that's how I am as a person, right? Just a strong confidence in my ability and my, I would say, ability to perceive and deduce certain things and then execute on that, right? Now, that's the personal portion of, I guess, your genetics, how you're born, whatever you want to say. The other portion of that obviously comes from experience. So the more reps you put in, the more time on charts, the more learning, whether it's macro fundamentals, technicals, all that kind of stuff, you aggregate it all together. And then you know that, yes, I can do this thing, right? The same way that, LeBron or it's always a good example of like high tier athletes playing their game. They know what they can do and they just know it. Even when other people be like, oh, that's like a challenging move. They're like, no, that's simple for me. It's easy. I've done this a million times, and they just go and do it. So there's definitely two parts there. In terms of, I've definitely come over my number of years learning that I seem to have some kind of slight thing that might be semi-abnormal to most people, that I just have that kind of confidence. But again, it's a snowballing effect that having that confidence to start means you do more, and by doing more, you get more confidence, right? And then so it's a self-fulfilling type prophecy, right? So I would say, if you're unsure about that, I would say just start and start going, start learning, start doing the reps, start picking things up, and you'll gauge that yourself, and that snowball for yourself will start as well. So, Griff,
we've got Griff.
Hello.
I managed to bring in.
Thanks for bringing me in. Sorry about that. It's typical. It's always me. It always happens to me, these things.
No, don't worry, mate.
No, it's not your fault at all. Yeah,
it's across the board, so no worries. I'd normally say bad workman blames his tools, but in this case, the tools are the problem in that we need to get used to them. So, yeah,
doesn't that make it the workman?
In our humble kind of what's the word? In our humble little stream that we have over on ABL, it's basically just me and LJ, and nobody else joins us. So it's just the two of us. So we don't have all these guests and speakers and everyone else joining us. So it's a lot easier to manage. Whereas the 5ers live stream is an entire army of people. So yeah. But great to see you, mate. How you doing?
Yeah, I'm very well. Pretty tired again. I think I said the same last week. The sleep is just going down and down.
That is not going to change anytime soon. Pretty much that's going to be your default status now for the next however many years. Mine has been ongoing for the last 5 years. So
yeah, it's crazy. I was thinking about how, if you guys don't know, I've got a newborn, so I'm sleep deprived like every day, and trading the Asian session a little bit more. And yeah, I was thinking, I understand now why like adults, why my parents, they're just okay, like waking up at 4 a.m. like real casual. I'm becoming that person all of a sudden. It's so strange.
It's like teenage years. Nobody wants to get up. Nobody wants to kind of get up early. Those early mornings or anything else. And the reason being is because you don't want to. Why would you want to? Well, as soon as the child comes along, hey, hell presto, it's a forced necessity, isn't it? So
yeah, I got 3 hours sleep, and that it was great. It was so good. I don't need any more.
It also tells you a lot about why they use sleep deprivation as a method of torture, doesn't it?
Dude, I feel like I'm primed for this. I'm ready.
LJ has been like he's been
same with
his entire life for this.
I'm like an agent or something as well.
Just,
they try that sleep deprecation torture on me. I'll be good. I'll be set. I'll be in my prime zone. I'm like, I was born for this. I've been doing this
if anyone wants their secrets protected, just hand them over to LJ. He will never give them up. He will be tortured until an inch of his life and will not give it up. But other than that, what do you think? First of all, what do you think of the new digs, the new studio, the new stream, Griff?
Yeah, it's beautiful. I mean, I don't have to check my economic calendar anymore. It's right there.
Exactly that.
And you can see the spreads. That's awesome. That's really cool.
Yeah. Exactly that. Yeah. So it's a labour of love, I think is safe to say. But by all accounts, everyone seems to be happy with the outcome. We've got a few more bits and pieces lined up though. So you have to watch this space, but there's more to come. So keep your eyes peeled, guys. Because there is definitely more to come. But yeah, tell us. Big question every Tuesday. We always ask you: have you taken any trades?
I took one.
You took one trade.
Yeah,
and it was a
break even. Very exciting. Couldn't be less exciting. Not even a loss.
If there was anybody who I know who is able to build up suspense at the slowest possible pace, it is Griff. It's like, okay,
for a break-even trade,
week after week after week. It's like, did you take a trade, Griff? No. Did you take a trade, Griff? Yes, but it was a loss. Did you take a trade, Griff? Yes, but it was break-even. Next week is the week when you come to us and tell us, guys,
9%.
It's like
it is how it goes.
It was funded at 4 million all of a sudden.
Exactly.
Yeah, I had like 13% win, 2% in losers, and then a break even. So maybe I'm gonna have this cycle now. Maybe the winning trade's coming next. It was a short on EJ, which is probably just what you want to hear. Except it hasn't been. It didn't end up working out. But yeah, I can bring it up. Let's see.
Well, I mean, I feel like as far as what we were talking about, Mike, throughout the prior week, that was actually valid until what we've had with the recent change with the Japanese bond market. That kind of shifted things, right? So I assume, I mean, you can show us where you entered, all that kind of stuff, Griff. But I think I have a assumption that your trade actually would have been valid otherwise.
So I entered right here.
Fundamentals we've had a bit of a kerfuffle, put it that way, recently.
Yeah.
So.
With fundamentals, I to be honest, I don't consider it at all. I mean, it's nice when you're telling me that it's looking like the JPY is going to get stronger, because I mean that helps. But I don't put too much weight on it as I don't use it as a reason to enter a trade. But it's nice in the back of my mind. So I took this continuation short. We had this ascending channel. I'd started seeing weakness, price slowing down here. Then we've got a shift down, breaking the high, and retracing with a shift down, breaking the high, albeit there is some momentum here, but we had a wick and we had a shift back down. Weakness breaking this high, wick breaking this high, shift breaking this high. So we're just, I'm seeing a lot of different signs within this ascending channel that price is slowing down, and on a technical kind of level. then we got this continuation down where I'm looking for a strong break, a pullback, and a continuation. So this is an extra good continuation because it's coming from a channel which is what I would consider really high probability prior price action. We did get this kind of slowdown, like there's this impulse, but when we broke this low, it didn't continue with a lot of strength, but we didn't get a shift. We got a pullback candle which showed no shift in momentum whatsoever, and then we got this candle down with a solid close, which is fairly rare on the JPY pairs. It's really nice when you get a solid close. So yeah, I set a pending order there, tagged me in. Right here, I was able to reduce my risk to 0.5%, and then I then spread hours, and then we broke the low again and reduced my risk to around break even. So it is actually a tiny winning trade, and then it tagged me out before just ranging around.
Yeah, because I was going to say, so that's probably something to do with the. So the trouble is, you had the tariffs with the EU and the tariffs on Japan, and then since then that's rattled over to the Japanese bond market, which prior we were just talking about being in the very long end, like the 30-year plus, right? It's now, it's like a virus. It's made its way into the 10-year. Once it makes its way into the 10-year, that affects global bond markets right now. Yeah. So I would say your trade is completely valid, 100%. But you've just had that disruption per the fundamental type stuff going on the side, which has probably disrupted it. So I would say that's still a very good trade nonetheless.
Thank you. Yeah, I think fundamentals definitely has an impact in the background without me realizing. Sometimes a positive impact, sometimes a negative impact. So yeah, overall, I just don't think about it.
Yeah, exactly. It's one of those rare things that actually has like a systemic effect to like the larger bond market, and then eventually the global system as far as currencies, all assets, how they're valued, that kind of thing. So it would be more of a anomaly per what you do. So I wouldn't take it as any kind of negative indication at all.
Yeah, no, that's interesting to hear.
What's So what are you looking at the moment then, Griff? Anything in particular?
At the moment, I think it's still EJ, funnily enough. I don't actually like this currency pair too much, which is funny because it's the one forming all the setups. I was looking at my data, and EJ, it tends to have the lowest win rate, but the biggest wins, which I'm not a fan of.
Yeah.
But, like the last month, I think I've had 3 trades on EJ, and I've had 2 losers and 1 break even. So yeah, it's not ideal when I'm getting more potential setups. We've just broken above this high. We're breaking and retracing on the larger level, on the larger scale. So depending on whether or not momentum continues here, I'd like to see a reversal. But like if we continue seeing momentum, I'd look for a continuation as well. I think I also had my eyes on AU because we had this descending here, and then we've had this push up. So yeah, depending on what happens here, whether we start trending, I might look for continuations and flags there as well. But otherwise, that is about it, I think. Yeah, just AU and EJ at the moment.
Mm-hmm. Yeah, I mentioned AU yesterday, didn't I, Mike?
Yeah,
that was starting to look good as far as it's just holding momentum, right? Per the other dollar crosses as well. It's like got good bid under it.
Yeah.
So
yeah. I was going to ask you, LJ. We were looking at GU this morning as a potential long. I actually got tagged into that trade.
Yeah, right. I was saying right on that level, though, like to a T.
But I didn't take the actual trade. So, long story short, I ended up trying to sell down to the level that I've been trying to buy at, and just literally lost my backside to it. I did get one semi-decent long out of it, but it is now finally coming off again. So we might start to see some longs come back in. So I'll show you guys what I'm talking about. You know what I'm referring to, but basically this is this is the setup that I was looking for earlier. This one here. So was looking for us to retest this little wick here on the 1 minute, and we tested it once and broke away, and then it came back in and tested it again and dipped in. Now, interestingly enough, that started with, I think it was a 2 minute candle, a 2 hour candle, was it? It was some kind of inside bar of some sort. My 90 minute, I can't remember what it was. 50 minute, or maybe it was 45 minute. Sorry, 45 minute inside bar. So it has started as a nice move. I just didn't think it was. I didn't think it was a clean setup when it happened. The way it happened was it just dipped in, as you can see here. The move itself created this level of liquidity. It started with this wickless candle as well. So again, it just didn't give me the confidence to think, right, okay, this is the move. But as it turns out, it would have been, had I held it, as high as where it's gone to so far, it would have been a nice, very nice trade, in fact. So it would have been still up to where it went. Where did it go? It would have been a nice, what's that, a 15R, had I taken it. Interestingly enough, though, we are coming back down, so it maybe wasn't the time for that trade just yet. So we are coming back down. We've broken past these areas here. So I'm just going to hide that. We're coming back down, and we're looking to take all of these levels of liquidity that we've got down here again. So there might once again be an opportunity for us to get into longs on this, because I'm still bullish on pound dollar, and I think if we look at it on the Dixie as well, it's a similar kind of sentiment. The Dixie does look like it's going to be coming off. It's just showing a bit of strength right now, but if you look at where it is, I think we're going to start to see some, we're starting to pull back slowly. So we'll see. I mean, we've kind of hit this area. We've paused. We have got this little gap up here. That's the only thing that I'm not entirely sure about. So we'll see. But yeah, that's what I'm looking at. But you were looking at it as well, AJ. Did you take the trade in the end?
I did. I actually on it as well. So as far as the Dixie, I think this was my magic drawings right here. This was pretty good. We got that little extra dip through here. Beyond that, and now we're coming up to my magic area again, right? So I think dollar index, US yen, I should say, if I can get my words right. We've broken this high, so that's my only concern for the other moves to start playing out. So I think it looks as though we're going to get a bit more of a pump, fail somewhere in this 148 kind of area, and then come back down. And then that'll correspond with, this is where I am on the pound right now. So I got in earlier at this level here, about, was it 134.37, then added at the 41.5 level. So still holding that, and I'm looking for a larger move. We've got the T.5 intra. So intra-session T.5 measurement, which is basically comes with this top right here, which is where we topped out before, if you guys can see that. So ultimately, though, I'm looking for the T1 somewhere up here with this cluster of liquidity before we fell off. The T2 being up here. There's a longer term trend line around at 135 as well. So that'll be the next point, and beyond there, we got 135, 25. And if we go out to slightly longer, I think what I have in before was a 1 hour.
How do you feel about the news coming in an hour, though?
Yes, so that is the caveat. So right up here, we have the 50-hour moving average as well coming in between that with this longer term trend line that I have slapped in there. you've got these high levels up here, and the T3 ends up being by the wicks just up here, right, from prior. So with the news coming out, that is very much a questionable. There seems to be a slight consensus for slightly higher inflation data. Now, the past couple inflation prints, I've been willing to bet against that in real time on the data per the numbers I've crunched. This month around, I'm not so sure. There's a bit more obscurity in the numbers, that they could be a touch higher from what I'm seeing. I don't think, however, they are 0.3% higher per the expected number.
So you think they're going to come in lower than forecast?
Maybe like a 0.2. So I basically got to like a 0.26 per my numbers.
Okay.
So, but when the headline number shows as well, it always rounds down.
It rounds up. Yeah.
Yeah. And rounds down, rounds up, right? Yeah. So if there's a slight variance in that, you can get like 2.4, and then it comes at 0.2.
Yeah.
Right.
And the market reacts
goes like, oh, it's terrible. Yeah. Even though really it's actually pretty close. So my numbers came out 0.26, which technically per the headline number would show 8.3.
Yeah.
Yeah.
But it's still lower.
Yeah. Yeah. So it's technically still lower, but per what the headline numbers will show will be different. So that's why this time around, I'm not willing to trade on that. So I'm going to be taking this trade right up until the inflation data comes out. And if we haven't made a further move from there, I will close the trade, take whatever profit I have, reassess after the number at this point. Because there's going to be extra emphasis on that number now, particularly per Trump's revamping of tariffs, and then a number of the comments from the Fed since they've revamped tariffs that they want to sit on their hands. Because prior to revamping tariffs, they said, oh, we want to cut. Now he's gone back the other way. It full flips. So that's what the market is looking at the minute. So that'll be the impulse reaction for that tonight. So it's definitely a risk to the trade.
And I think that's the one thing that's kind of got me sitting there thinking, do I really want to be part of this right now? Particularly just where it's kind of formulated this structure, there is liquidity levels further down. At least just looking at GU, for example, there are these levels that are, I would say, quite important. So just down here on the 1 hour, you've got these little inside bars, and I think it's on the 4 hour or the 5 hour as well. They're inside bars. So these are not kind of insignificant areas to kind of ignore, let's say. Trying to see if I can find it. It was on one of these. Maybe it was it was the 4 hour. So I wouldn't be surprised if we saw, as part of a reaction to the news, something coming down like this, sweep these, and then head on higher. That would be, I think, an interesting move. The problem is that it depends how quickly that move happens. So if you're on a high stakes account, you got to be really careful that you don't get caught out trying to trade the news. If it suddenly spikes down and dips down to here, I mean, that's got to be a pretty significant move for it to do that. But that would probably be where I'd be looking for an entry in this little pocket here around the 130 to 60 area, something like that, for potential buys, and then watching it go. But as you say, it could be a nothing, but I don't think it's going to be. Even if it comes in at forecast, there's still going to be some kind of volatility coming into the market on that. Yeah. We've got DJ with a comment saying GU on a 4 hour time frame also has a nice aggressive demand zone, which buyers left at the psychological level 134, and Dixie is also in a previous daily supply zone on the higher time frame. So essentially along the same lines of what we're talking about here. This is the challenge. Is you got this little pocket here, and that's what it's bounced off at the moment. And so it's now a question of where we're in this higher zone. I think it's from a weekly. Let's just have a look. It was this previous weekly zone, or it might even be a monthly zone, that I've marked out in the past, and that's why it's still got strength and validity in it. So yeah, something just to be aware of and cautious of. Just trying to see why this specific wick, but yeah, it's a zone of interest for sure. If we look at where we are on the, if I delete that fib and I delete those arrows, then you can see here we did change direction from here. We dipped down on the 4-day, and we're now looking potentially for higher, going up again. So see how that one plays out. Yeah,
exactly. Because what I would say with the inflation, like I've consistently bet against higher inflation for the past number of months. So we haven't seen the tariff throughput. We're still not there.
No.
At all. And everyone keeps trying to input that into the numbers.
Yeah.
It's not there.
Everyone's trying to front run the tariffs essentially, and trying to say, it's coming, and it's not happening, isn't it?
And the factor is, there's been some with some of the things that take a lot longer to bring in. So, say like automobiles, that kind of stuff. Like you gotta put them on ships. It takes a very long time. There's a lag time between they come to America, that kind of stuff.
Yeah.
The other trouble, which is distorting it, and this is where I get the concern that we could get that uptick in inflation, is that everyone knew the tariffs would be coming to some degree. So there was a lot of front running of inventory prior to that. Then we got the tariffs being higher, then they came down, then went higher, down, whatever. Either way, all the companies go, let's bring in all this inventory ahead of time. So they've got excess inventory, which they're now selling, so hence the price stays lower.
Yeah.
Once they run out of that, and then the tariffs actually do kick in, then all of a sudden you get this jump up in inflation, and now that causes a problem. And that's where we were talking the other day on ABL, per the portion of flipping on the dollar yen trade of crunching 140. Now, because of the timing, because of Trump, I think we might be more likely to hit 150 before going below 140. So now it's a question of which one of these, potentially, because if that plays out, I think the Fed will be sitting on the hands for longer instead. And you get that input into the dollar. You still have the carry trade, obviously, particularly for dollar yen, that kind of thing. And now we've got the kerfuffle in the Japanese bond market, which is further driving stuff up right now. And so I think you could see a slight shift in that, where this is one of those things that's really hard to calculate or perceive. And hence the thing with stuff like the Fed, they're always behind the curve, and they're going to be looking at this and going, okay, that's the forward outcome. Plus, you've had the stuff with immigration of people getting kicked out that drives up wages, that kind of stuff. You might actually very much still be in the seat of getting that further inflation towards the end of Q3, Q4.
Yeah,
I think that's kind of what we're looking at. So we might have just extended the timeline for the further drops of the dollar into 2026 rather than the back end of 2025.
Yeah. I can see you guys shouting at me about gold buys. I'm not seeing it. I don't know what chart you're looking at, but that doesn't look like a buy to me. But knock yourselves out. If that's what you want to do, go for it. But this isn't a signal service. So
I think I was going to say, there was another question from, I think it was from Akram. If we can find it again, because I can't highlight the question.
Yeah.
That was a good question. If we can find it, I'll...
Looking for it.
Where was it? Where was it out here? I'll try and find it.
All I've got from Akram is good afternoon, everyone. That's all I can see right now.
It's great because we can search up messages now.
Maybe it's certainly somewhere else. But Akram, if you're there, mate, post it again, and then I can easily share it. Beverly is suggesting on GJ.
Sorry, it was from
Just
Henry or Griff.
Oh, is it Henry?
Sorry, not Akram. Yeah, that's why I was getting confused.
Henry's asking for how do you deal with the 10 pips stop loss with the overnight spreads, Griff?
So at spread hours, I have an idea on my broker how much the spreads widen. So on the dollar pairs, it's like 20 to 30 pips. On the JPY pairs, it's like 30 to 50 pips. On NJ, it's like 50 plus, I think. So what I'll do is I'll just widen my stop loss. I won't remove it. I'll widen it for the 1 hour where spreads have increased enough to cover the amount that the brokers increased the spreads by. So for example, on the EJ trade there, where I think I was using a 20 pip stop loss on that one. The spreads went all the way up to like 40 pips. So I basically just increased my stop loss to like 60 pips, make sure that I've got plenty of wiggle room. And then after spread hours, I just put it back where it is. And I'm doing that in my 5 years of trading. I've never been tagged out during spread hours. So that's my way of doing it.
So you just do that every day, like manually?
Every day I'm in a trade over rollover.
Yeah, fair. So much easier for you guys, because for me that's like 7 a.m. in the morning. That's when I need to be asleep.
Yeah, so
I'll be awake this time. Right?
I get to do it right before I go to bed. So like it's like bedtime, move my stops back, and then I go to sleep. 11 p.m.
Yeah. Nice.
Beverly's asking about 390 entry level on GJ, so something like that. I mean, I'm assuming you're looking to buy, Beverly.
Yeah.
Not sure, but that's my assumption. I'm not seeing it personally at that level in any. There's no real reason for me to suggest that level in particular. So I wouldn't feel comfortable saying to you yes or no. It does look long, as does the pound generally, right? Because the pound has just literally just been pummeled for so long. But again, I mean, it'd be good to know a bit more context of what you're looking at for, Beverly. Like you're looking at longs, you know, are you talking about a swing long? Are you looking about an intraday? Well, give us a bit more context, and we can obviously pull that up and have a look at it. But yeah, I mean, certainly it does look long, but whether it's going to come back down, it's already come down once and twice. I'm not sure it's necessarily going to come down a third time to tag you in at that level.
It would need to come back quite a lot as well. I think for me, this is where the order is right now is quite similar to a reversal, my reversal entry model, but the way that it's moved up, pulled back, and then continued, now it's a continuation entry model. So if I were taking this type of entry, I would have a pending order just on that top of, right there, basically. So maybe that's a good level.
You'd have a pending order, this open of this candle?
On the top of like the black candle there. I mean, it's not exact, but like if I was to try and brute force my entry model onto this kind of entry, that's around where it makes sense for me to enter. It doesn't fit my plan, but that's where it would make most sense for me.
And then you'd be having a stop loss below that candle, right?
I use a fixed stop loss, but yeah, below the candle would be most sensible probably. But then I would also be cautious of the way that price retraces, because like with the previous pending order, like at the 390 level, it would need to retrace so much that I wouldn't really be convinced of a buy anymore. Whereas with this, you have the opportunity to get involved without it pulling back too much. Because if we are going to start a huge trend, we're probably not going to retrace like that heavily, based on my experience.
Cool. There you go, Beverly. Hope that helps, and no worries about the cap blocks. That's all good. Zhao Lapa is asking, is Euro USD bearish movement manipulation before the news? Call it manipulation, call it whatever you want, positioning. But yes, I would say so. Euro USD is going to be on a similar path as Euro USD, because obviously the news is linked to the dollar, but just like on the pound where I said there was liquidity further down, you've got a similar kind of situation with Euro USD as well. So we're in this wider structure, and it's just a question of whether it wants to take these levels here or not. So this level here is an 18-hour candle inside bar. It's got liquidity at the top, it's got liquidity at the bottom. We're in this wider zone, which I think was a weekly, it was a weekly engulfing candle here. So that's why this pink zone is of importance. So the question will be are we going to bounce off this to then push higher? The thing because we've taken this bearish candle, the low of it suggests that we're either going to see a really significant change of direction where we pull back down, we're going to continue higher on this upward trend, or we're going to see us pull back down to a lower level around about the 145, 1.5 area, that sort of area. So we'll see. What do you think we should sell it? So Vibe have I'm not sure why you would want to sell it, but if you want to sell it, knock yourself out, mate. But do your own analysis and follow your own strategy and follow your own setup. But I wouldn't necessarily be selling Euro USD unless I see a setup and a structure forming, which I don't at the moment. Not sure what happened to you, LJ.
Computer just pulled blue screen. The whole thing. I had to restart.
These
Just
technical
crashed.
gremlins, seriously. It feels like there's something going around at the moment, and it's not just you're cold. It's like all of the computers as well are getting some kind of problems or other.
I will say with sorry, I'm gonna pronounce this. How did you pronounce it? Vibe,
yeah.
Probably pronounced that terribly. Sorry, brother. But to be honest, if you didn't get on an earlier entry, I would potentially wait for the CPI, because there is a strong chance that CPI does actually drive Euro-dollar lower. I wouldn't be surprised if we see 116.30 or so on the CPI if it does come in higher.
Yeah.
Right, and there seems to be in the market right now a very mixed picture as to what's going on. I already exited my pound-dollar trades since they haven't kicked on after Euro-dollar coming down. So I would just be very cautious of that. I would say trade the aftermath of the CPI before entering stuff now. That's your best bet.
And especially, the key thing as well is especially if you are if you're on a high stakes account, right? So that 4-minute window, you don't want to get caught out by that. So just avoid getting caught out by nasty spreads, slippage, all of that stuff, and the news rule if you're on a high stakes account, which I know many of you are. So just be careful. Any trades opened, whether they be a pending trade or whether they be a market order, so a pending trade that gets triggered 2 minutes before, 2 minutes after on the assets where the news is impacted. So we've got CAD news, we've got dollar news. What you got to watch out for is any CAD or dollar pairs. Don't be trading them in that window, basically. Anything else you can trade, but also remember as well that those can also move because of the fact that the dollar is such a global force to be reckoned with. So yeah. Hopefully that helps. But yeah, I mean, if you look at it, where we are right now, as I was saying when we lost you, LJ, we've got liquidity at the bottom and at the top. So, we know that CPI can be one of those things that is a bit of a whipsaw and can move things around. So, something just to be careful of. And we had a comment from Mohammed with regards to pound CAD. What will be the effect of the CAD news on pound CAD based on current market structure? So I can pull up pound CAD. I know that LJ, you're not particularly familiar with the ins and outs of the CAD news calendar and all that sort of stuff. Have you
For
looked at
the
it since?
exact reason that everything always comes out at the same time as the US data, right? So as far as trading, it's an absolute mess.
Yeah.
So if you're going to trade the CAD whilst the dollar data is also coming out at the same time, it's always CPI, it's the jobs numbers, all of that kind of stuff.
Yeah.
Absolute disaster, right? So, unless you somehow capture like, NFP is really good and CAD employment data is really bad and you get some distortion, but you're not going to be able to double assess both the jobs numbers and get them both right. Like the chances of that are next to nothing, let alone the CPI. So I would say, to be honest, avoid CAD for today.
Well, especially given the fact that the CAD is so heavy, the Canadian economy is so closely linked to the dollar, that you're talking about news that's going to come out from one economy that impacts that one. So there's so many moving parts, as LJ says, that you really want to be careful on that one.
They've had exactly that with the tariffs. Like a bunch of the there's a heap of, because they often used to swap, even whether you take just take the car market, right?
Yeah.
They used to be shuffling cars across border all the time and just be like whatever. Since then, the car market absolutely collapsed. Those getting shuffled across the border.
Yeah.
Key example, obviously, in the highest extent, is like supercars, that kind of stuff. Dead, absolutely dead.
Yeah.
Because no one wants to pay that extra, right?
Yeah,
so
exactly.
That's an extreme example where those multiples make a larger impact. But across the board with manufacturing, when they're also dealing with multi-million dollar contracts, they're going to just pull the plug.
Yeah.
So trying to gauge CPI per that across both in real time against each other is nigh on impossible, effectively.
Yeah, absolutely. Venetius, I'm not sure what advice you're referring to. So I'm confused. Stephen,
he's telling you to take the liquidity out of the market. If you could just close your liquidity, take all the liquidity out, make it all go to zero, please, Mike.
So
thank you.
That's okay. So that's 7
Drain
trillion. Hang on. Let me just
close that trade.
I can just shift that 7 trillion to shut down the forex market. 1 second.
You switch your Bitcoin, Mike.
Yeah, I'm just doing
USD,
it on my phone.
You got to get the stable coin back into real fiat, and then put it into the FX market, and then crush it.
Here we go.
There you go.
Right.
Sorry, just give it a couple seconds, guys.
I'm doing it now. Right, hang on, it's coming. All right, ready? Ready, go.
Bang. Done.
It's all going to collapse. It's all going to collapse.
Wow.
Griff, we've got a question for you from Stephen. Good to see you, Stephen. Stephen saying, how do you handle some losses in a positive way, and how can one work on some losses in order to perfect the winning rate? I think there's nobody better placed to answer this question, and I think that's why Stephen's asked you, because you handle your losses and everything else in the coolest, calmest way possible. And especially given how infrequently you take trades, I'm really curious to hear your answer to this as well.
That's the key thing when you're taking, just before you go, Griff, like when you're taking swing trades, it's very hard because you've got one every so often. And if you get 1, 2, 3 L's, you're like, oh, okay.
Yeah, it does take some practice.
Yeah.
In back testing, your losing streaks will last like 15 minutes, until you get to, because you can just go fly through like multiple months. But in real life, you can be in drawdown for like 6 months at a time, potentially, depending on your swing trading strategy. Handling losses, I think, whenever I'm feeling doubt, or because that's the main thing. I think if you're having a lot of losses, you start to question whether or not your strategy even works. So doubt can creep in, and for me, the way I kind of handle that is by looking at my data and reminding myself to look at my trades in a series rather than on an individual basis, because it is a random distribution, the way that whether you get wins or losses. Obviously this is all like trading basics, but it's great to reiterate that to yourself. Go on a walk, journal all your trades, review them, rate them, do a review at the end of the week. That's what I do. Most of the time these days, I don't really take any trades that I disagree with. But it's good to be like in the past. You got to be able to hold yourself accountable. I think all those things, a bunch of bits of advice there on handling losses. In terms of like removing losses to improve your win rate, first of all, win rate I wouldn't say is super important. There's plenty of people like myself that have a low win rate strategy, but the average win is quite large. So I would say focus on.
I feel like that's the best example, dude. Right? He's got like a, 20, 19, 18% win rate, yet he was the guy that broke the Bank of England. I made over $1 billion profit on that one trade, as an example. So you can have a terrible win rate, but it's about how much you clean up. Right?
Yeah,
so
I agree. I think it's easy to focus on win rate because that's what feels good emotionally. But what's actually important is profit at the end of the day. It doesn't really matter how often you win as long as you're making the most money. I sometimes focus on eliminating losses from my strategy, from my data. And the way I do that is I will just look at all my losses and I will look at the common characteristics and try and come up with some filters to be able to filter them out. But you also have to look at the winning trades and see how the filters affect those as well. So quite often, I won't do what I just described. Quite often, I will look at the pair characteristics of my winning trades and focus on the winners rather than focusing on the losers and focusing on eliminating them. I don't think it's too important, but I think it is good to focus on getting into more winners rather than getting out of more losers. There's my answer.
Yeah, absolutely. Mohammed, just very quickly, Mohammed, if you go back about 5 minutes, 10 minutes, we looked at the pound US dollar a little bit earlier on, predominantly looking for buys, but nothing decided until we see what the news is going to be in just over half an hour. A few questions just coming through. So do you think the best time to trade indices is New York Open? Depends what indice. If you're going to trade the DAX or the what's it called? Nikkei, the Japanese Nikkei, New York Open is not going to be the way to go. I'm assuming you mean the S&P 500 or the Dow Jones or the NASDAQ, then yes, you're going to have a lot of volatility and a lot of liquidity come into the market at that time. But again, it depends what you're looking for and what your strategy is. If you're swing trading, you're not necessarily going to get your swing, change directions at the open. So key thing is to go and back test.
I would say it depends where the price is for the NAS.
Yeah,
because that was part of my strategy yesterday, right? And cleaned up on that, right? So one of the things you can do is compare it with options, right? Where's the zero DTE, right? So that's 0 days to expiry options for today on the NAS, and price is like way below. Generally, it will tend to aggregate up to that level. Yeah. And so like yesterday, we had the gap there. So you had a gap to be filled, plus the options pricing that would be filled, and we had that big drive. I will say right now, we've driven on from there, and the options are pricing lower for today. Yeah. And that's part to do with the CPI stuff, that potentially if that is higher, we will drive lower. So I would be, for anyone out there in general, I would wait until the CPI to really push on any trades. I think that's the best op today. Yeah, normally, like we're saying, I normally have a queue on that stuff. Today, I don't. It's too unclear, too obscure. I would wait. So,
Neil's asking, do you generally close all trades over the major 28 forex pairs when the major US news is scheduled? I think it goes to the same answer that LJ just had as well. It depends where the price is. It depends where your trade is. Depends what you're trading. If you're in a swing trade and you're well in profit and you're convinced and certain that the news isn't going to change direction entirely, then no, you wouldn't close your trade, right? It really depends what you're looking at. But the fact of the matter is the dollar can and will move the markets across all those forex pairs. The more obscure ones less so, the minor ones, but it will still move the markets because it is the reserve currency of the world as things stand right now. So it is still going to have some kind of an impact because, as LJ said earlier, it rolls over onto the bond markets, and that will then ripples out through to the various forex pairs as well. So
the valuation of every single asset on the planet.
Yeah.
In fact. So there you go. Yeah.
Exactly. Noah is asking about NASDAQ big short coming. It does look short. This structure that we've had on the NAS does look like we're going to be pulling back. But again, remember that we've got this news coming out. We've got a pretty big breaker structure here. So I would suggest, yes, we're probably looking at going short, but I wouldn't try and catch it. Personally, I would be, as LJ says, trade the reaction to the news. Wait for the news to come out, see how it plays out, look for the levels, look for the support areas that it's going to come down to. If it doesn't come down to one immediately as soon as the news comes out, that doesn't mean that it's not going to go to it. Just give it time, let it play out in that first hour after the news. Because remember, you've got pre-market coming in 5 minutes, right? So you've got pre-market in 5 minutes, but then you've got the news in half an hour, and then you've got the actual market open half an hour later, right? So, or an hour later. So you've got to wait for that staggered effect to take effect onto the actual markets to then try and find a better A+ setups. Would be my advice.
You want to throw over to my chart, Mike?
You got yours back up, yeah?
Yeah. I'm not sharing. That's probably why.
Yeah, that's.
Yeah, that's an issue. Yeah, sorry, I didn't realize. Okay, there we go. So,
he's back. There we go.
There it is.
Yep.
Yeah. So where we are today on the NASDAQ. So where the options pricing was right here, like this band yesterday. So that's why I took entries down lower here. We got through that band. Once we spiked up on the initial New York Open, I actually took another long. We went further higher. Since then, I haven't taken a long. This line right here today is where the expected options pricing is for today. So the market is pricing that we will actually get a dip. So given that and how far away we are from price, and right now we have a persistent bid on the indices in general, that's going against the overall trend. So I would prefer to buy an entry down here rather than trying to short this.
Exactly.
And you can see where there's clear liquidity through here. So that makes sense. It's the tops of these levels, plus this impulsive drive up through here that we had earlier today. I can show you that on here. This is the probability distribution per the NASDAQ for options pricing today. So right here, you can see 22,856 is the expected move. So that comes in just down here. So the chances are, if we do get a drive down, this is where you will find liquidity to bid up the market from that. So my preferred move would not be to short this, it would be to buy from this level and then go up, right? So that's how that stuff works. So the options pricing can often help you trying to figure that stuff out, where other big players in the market are hedging out price, that kind of stuff, and trying to figure out what's going on. And that's where market makers offering those options on the other side of the contracts have to shift around their offerings for that. So they don't buy the full amount of the contract when you purchase an option, but as the price approaches that level, they buy more and more and more of the contract, which drives it closer to that level, right? That can be short or long, and that's known as gamma, right? Spot gamma. So today, definitely, as we were highlighting earlier, I would say wait until the CPI before major moves. Same with the euro, like we're down into that lower band as far as a potential buy zone that we're talking about in the euro. But with today's CPI, we could definitely get a catalyst and a kicker right down into the lower 116s, right? So if you bought in here, take a shot on that, but chances are you might actually get played out.
Yeah.
So it'd be better off buying like a break structure here on a worse CPI and seeing it go higher, rather than trying to take a chance here. It pumps, you get stopped out, done.
Absolutely. Excellent stuff.
Very interesting.
That's about it from us. I was going to say, sorry, my brain stopped working there. Yeah, that's it from us for this segment. Griff, always a pleasure, my friend. Next week, remember, taking a trade and it was a winner.
I'll remember to make it a winner.
That's the mantra, right?
Yeah.
Do it. 17%.
You got it.
Come on.
Great to see you guys. Coming up next, you've got Victor and Deanna. So stick around for that. Otherwise, we'll be right back after this. Take care, guys.
See you guys.
See you guys. Ciao.
Am I? All right, so let's take a look at the market. There you had it. Let's see. Let me. All right, so apparently I'm still have to do something. There you go. Thank you. There you had it. LJ flexing knowledge. That's the way we like it. Let us know in the chat what you are thinking about the market. Are you getting ready for the action that's coming up? The news, that is the CPI on Canadian dollar and the US dollar. These are the ones that we're going to be looking at in about 27 minutes and 15 seconds. And we have the charming Dr. Cole waiting for us in the background, telling me anytime, all right, let's go. Here we have, it's my pleasure as always. How have you been, Dr. Cole?
I'm doing great, Victor. How are you?
I'm fine. Now that you're here, even better.
It's great to see you. I hope you had a great weekend, and I just barely got to see you yesterday, so I'm hoping you're doing well.
Yes, I'm doing fine. Thank you for asking. The chat is getting ready for our session. We are already in, of course. But what are you waiting for today, Deanna? There's news coming up. We have been talking about it. Mostly the dollar. That's where the eyes are focused on. Or are you looking at the Canadian as well?
Well, welcome everyone. Venetius, Stephen Manish. Good to see everybody. Nora FX. It's great to be here. I'm looking at the indices today, and gold. Gold has been kind of a little bit more interesting lately. So definitely at this point, I took a trade for me last night. So during the Asian session on the S&P, but now I'll be waiting. I'm already positioned with a runner, so I'll be waiting until after the news release. But typically things get pretty wild on CPI, so I would expect a lot of movement, and there could be a setup in gold as well as in the S&P. The S&P is so high right now. It's at, just under what was the all-time high and just under fresh all-time highs. So I want to wait to see what happens after CPI, and maybe there'll be some type of pullback or something that could set up an opportunity to get in the S&P. So we'll see. like you said, 26 or so minutes, and then there should be a lot of activity and a lot of excitement in the market, most likely.
Indeed. Let's check. I'm gonna switch to your screen a little bit because I wasn't showing yours yet. Let's see if that's the correct place to put it. Right. Let's see how this works. All right. No, I'm gonna leave it just like that because apparently I need to figure that out still. So no problem. So you're gonna be looking at the equities. What is? Do you always wait for the news before doing any decisions, or it depends on the market, the price action?
Well, ideally, I prefer to get in a position before the news so that I'm kind of positioned. And so that's what I did during the Asian session last night. Unfortunately, you can't see my screen, but if you could, so what we had talked about yesterday, Victor, we just missed each other yesterday. But what we had talked about yesterday was looking at the daily time frame on the S&P. There was a really nice move where the S&P dipped below the previous day low and actually a prior low as well, and then started to move above. And so we had talked about if price, again, kind of resides in a level above the prior day low, that could be a high probability entry. And so I had a trade outlined that I took yesterday, and price did move on, but then later after the market closed into the Asian session, after price had gone up about, there was a time when price kind of dipped below. Again, unfortunately, you can't see my screen, but there it is.
Yes, you can. Yes.
Price had, let's see, here's where the Asian Open happened. And there's this important level here, 63.05, which has been a level for some time. So if we drag this over, you can see price has kind of skirted around this level a ton. So even further back, we can move it all the way back. And so this has been a significant level for a bit. After we took that trade yesterday that we talked about on the stream, which is right here, price went higher and then dipped below that 63.05 level and then a strong push higher. So this is when I entered last night so that I could have a runner on today. So as far as if I always wait for the news, ideally, like I said, I'd like to get positioned ahead of time so I can just be down to a runner. So I wouldn't take a new trade on CPI, 23 minutes before the CPI release. Now, for me, it's just too late. I either want to be positioned in a trade, or I want to see what happens after the news, because typically there's such a injection of volatility around CPI that even if you are correct on the direction and your idea is ideal, there's a good chance you're going to get stopped out anyway. So no, I don't always wait until after the news release, but now it's too close. 22 minutes is too soon for me typically. I mean, maybe there would be a scenario when I would consider getting in, but definitely not near all-time highs and near this previous all-time high as well. So for now, it's time to wait, see what happens. One of the things that we have been talking about is when price goes above, here's where it went below that the previous day low and then pushed above. We had that yellow level marked out, which would anywhere in there would be a fine entry. Now we kind of have the opposite scenario. So this is what we saw in gold yesterday, where gold had pushed above the previous or a prior swing high. In gold, it was a previous day high, and now it's back below that level. So definitely, for a new long position after CPI, I would want to see gold back above. This could be a time where typically it maybe would set up a short, but because we have CPI and because the S&P has been so strong, I definitely would not want to take a short here or anywhere near here. So just from a technical perspective, though, I'm talking about how the same, you can call it a pattern, keeps showing up again and again and again, and you can use that as a basis for your trading if that's something that sort of resonates with you.
Yes, indeed. I think that's good. That's very good. That makes sense. A lot of sense for myself as well. It depends on the market is complex, and the same way we always say it's simple, and simple is the way to go. There's obviously layers to that, right? There's layers to simplicity. In other words, there's complexity to that simplicity, and that's what you're telling, because there's no one size fit all. There's no one plan that you have to like robotically apply all the time. It's because the market isn't that. The market is moving on because of drivers which are unpredictable. We this unknown things happen all the time that are you know people and the market participants, they may have things priced wrongly. That's how the market works. So it makes a lot of sense what you're just described. And I when I compare to that, like answering the same question about whether I get my trades in before the news or not, it depends on price action. Sometimes there is it is completely normal, and not only normal but adequate, responsible to get into the news before the news. I mean, while there's a big unknown, but if the market structure tells me that it is possible by moving away from that area, by letting me know that there is enough room for that stop and a trade to be placed and maintained, then who am I to disagree, right? We're here just to trade what we see, right? Price action in this case, or in your case, all these factors and conditions that you're looking for in the market, not only as well as price action. I want to switch a little bit to show the trade that we discussed. Let's see how that works. Discussed a little bit earlier, and that was the EU trade, which was very beautifully went to stop, to not stop loss, to take profit. And for those who haven't seen what the rationale behind that is, nothing about the news, right? Nothing about anything fundamental, just order blocks, right? H4 order block freshly retested as the first piece of the puzzle. Then on the H2, there is an outside bar, but actually I was looking at something as aligned as possible, which is the H1. Look at that. It is a very not very obvious quasi, but very clearly there. Yeah, it sounds contradictory what I'm saying, but it's not, right. It's not very obvious, but once you have a rule, once you have something objective to discern whether or not, or decide whether, assess if this situation is the pattern is present, it is clearly fulfilling it. And that order block, which was the reason for that short, and I front run that H2 order block right there. And if it continues to go down, that's fine by me. I'm not gonna feel anything FOMO or anything in that sense. I'm only here to catch the next level. You could argue that the market structure allows us to take and hold that position into the news, and maybe that would be perfect. But I'm not here to to take big chances. I'm just going to the next level. I'm not here to gamble. I just want to go for a sure thing. And to me, that's just targeting the next area. And for those who are wondering, what exactly, how did I get in? It's a quasi on a lower time frame. I already took the markings away, but this was the head. That was the, let me see. This was the here. There was the neckline, and after it got taken out, price came back, interacted with that order block, and bingo. That's my entry level. That's the market telling me, or the price action telling me, now is your time. Victor, put on your mask. Let's start trading.
Victor, do you trade with no, you don't trade with your mask when you're not on camera, I imagine.
Of course I do. It's my edge.
I'm just wondering if it's your superpower or something.
Yes, it is. That's all my
maybe you do.
confidence relies on this mask. You guys all wondering, whether I have teeth or not. It's the power of my edge that is in this mask. I'm making that reference because someone made a joke that the reason I have that mask is because I have no teeth. And I jokingly said, it's true, but of course it isn't. But it's not about my teeth. It's about the edge. This is the way I get my money. Big payouts coming when I put on this mask.
That's too funny.
I like
It's-
you.
some
Go
people,
ahead.
Some people wear a cape and that gives them superpower. You've got your special mask.
Exactly.
That's
Actually,
great.
what Deanna, what I do before I start trading, the first thing, actually, this is a very powerful tip for everyone who wants to be, having superpowers. Before you start trading, I stand up tall in front of my computer.
Mhm.
I put my hands around my hips. I
Yep.
push out my chest out, and then I put my mask. I feel like a superhero.
Maybe that's the step we've all been missing. There's actually a lot of research on that. That's called the power pose, where you put your hands on your hips, or you can get
Okay.
big, hands overhead, chest lifted. That pose, assuming that pose, there's actually scientific research that shows that changes the chemistry of your brain and increases confidence, increases your perception of dominance, and that can be really helpful as a trader. But the mask is a step that I haven't heard before, so we'll have to get some scientific research on that to find out what that does exactly. That's hilarious.
I didn't check. I didn't check the scientific literature. I just tried it
Oh,
once, and it worked, and I
there
never
you
looked
go.
back.
All right, everybody go out and buy your mask for your superpower.
All right, so that was the trade on EU, and these are exactly I'm from once. If you look at when we zoom out, I'm just interested to the next relevant area, right? We didn't have any H4 order block to target, and yes, we do have the low of that candle to target still if you were to have a bigger target, but I don't have anything on the macro level. So it's just intraday, one level to the next, or better said, one order block to the next, and that's it. I take my slice of my pie and I sit in the corner, consume my pie.
With or without the mask?
In that case, I'll have to take off the mask, obviously. All right, so let us know in the chat if you want us to look at any particular asset or any color of mask. I'll be happily showing you all. No, but let us know what asset you guys want us to look at, because that's why we're here. We're here to we're going to be looking at the market as the news comes out. But that's going to still take about 11, 12 minutes and 7 seconds. So it's going to take some time. In the meantime, I would like to remind you, if you think this is helping you in any way, even if it doesn't help your trading, if it is entertaining in some way, then hit the like button, subscribe to the channel, because that's part of what we're trying to do, right? We're doing our best to make the stream have as much knowledge, as much experience, as much tips and setups, ideas, suggestions as possible, in as the best consumable matter as possible, right? And I'm not entertainer, we're not entertainers, but we try a little bit. All
and
right.
As far as tips go too, Victor, one of the things that I will say about CPI, whether you take a trade now or after, one of the things that I have found, and I have to remind myself of this as well, is CPI is a time to consider lightening up a little bit. So whatever your normal size is, maybe you might want to consider. Again, not a hard fast rule, but maybe you want to consider trading a little bit lighter today. That can be really helpful. I know that's not what we always want to do. That's not what we want to hear, but can be a little bit helpful. Looks like you're getting quite a few requests, Victor, for GBP.
Yes.
And also, there was a question. I'm not sure if you said on. There was a question real quick before you go off of EU. DJ had asked if you could confirm there's a fresh H2 order block within a fresh weekly order block on EU.
Let's take a look. I'm gonna see if I can pull up the message. There we go. Thank you for pointing that out, Deanna. Let's see. It is a fresh H2 within the weekly. Well, we do have a weekly on. Is that on EU? Yes. Okay. So on the 1738. 17 yes, that is indeed, that's the weekly order block. There's only one, and it is still fresh, so yes, it is fresh. On the H2, to go to that, let's see, let me mark this and make it visible for us to see, right? Because currently I have the weekly not visible, right? Because I want to have as little as possible, even though it's still very much visible. I still have a lot of things, visible on the chart. But so this is that's the lower order block, or the lower border of that order block, that weekly fresh order block. Yes, it is there. And let's see if we have the H2. The question was a fresh H2, if there is one. No, there isn't. The only fresh, at least in my book, in order to see if something is fresh, according to me, I know that's according to me. It's not written in any, it's not like the 10 Commandments. It's not absolute truth. It's according to me. But what I do is I count the numbers of bars that have been created since the creation of that order block. And if we see if on the H2, let's see, we go closer to that price action. We go back from current prices, and we do have one order block here, which is the bullish one. I don't know if that's the one you meant, but none of it is within that weekly. So the quick answer is no. There isn't an H2. It's not fresh anymore. There isn't. The only order block that I do see that is still acting is the H2 that was created by this outside bar, which is very similar, and that's why I took it off, as the H4, right? If there are two order blocks that are basically telling me the same area, it is in alignment, but it is not refining each other. So I want the lower time frame to refine, otherwise it's not helping, right? So there are exceptions to that rule as well, but in general, if the order block is not refining, I try to look for something else. It needs to be refining that area. So we do have an order block, and that was the same reason that we had this reaction, right? Very beautiful. This is what I trade all the day, all the time, every day, which are these order blocks being created and then coming back to retest that. But that order block, by the way, was by the time it was reached, was fresh, but now we're already had that reaction from it. Now I don't want it anymore. I want it to be fresh from the oven. Once it's out there on the table, it's stale to me. I don't want to touch it. It's already no longer fresh, so I'm not going to be using it. That's the only H2 structure that I see, but it is, to answer your question, it is DJ. It is not within the higher weekly order block above us. And by the way, to me, now you can build a system with this alignment from H2 to the weekly. And who am I to say that's not the correct? You cannot build something with those two time frames as the alignment. I'm pretty sure there must be ways to do that, but personally, I think that's a way too big of a step in terms of the going from H2 to weekly is way too long, too big of a step, too big of a leap. Because what you want is that one time frame affects directly the next one, right? And the H2 compared with the weekly, they are too disconnected, in my opinion and my data as well. The way I trade, they're not close to each other enough to be the logical next step. But you can still certainly build a strategy around that. I'm pretty sure you can.
So Victor, you would say, I've heard kind of a rule of thumb, and I've used this. It's pretty helpful, but you would use the daily, right, with the H2. That would be close enough. You wouldn't couple those.
No, I wouldn't. What I do know that a lot of people use the hourlies and the H1 and thus the H2, which is very similar, very close with the daily, right? And that for certain things that is for certain strategy, that is perfectly fine. For a lot of strategies, they do use that as adequate, the snap. But from what I seen using, or at least my data using order blocks and quasi, I want to have that snap to be very close to each other and roughly a factor of 4, right? Factor of 4 between ones to the other one. So 1 hour to the H4 and H4 to daily, that makes sense to me. That's factor 6, but I mean, it's roughly 4, and the same thing as the daily to the weekly.
Yeah.
That's a factor 5, of course, not 4,
Yeah.
but it is roughly 4. The next logical, because the thing is as well, you want to be using a time frame that most other people are using. Let's say if you're going to use very strictly a factor 4, and you're going to be looking at, not the D1, but D4, right? Each 4 days, even though it may have valuable information, it's not the weekly. And the weekly is the one, compared to D4, the weekly is the one most looked at. So you want to be using, we want to be using structures that are visible for a lot of people, right? The more people, the better, because they were going to have their stops, their targets, and those levels as well. And that's what we want. We want those liquidity to be swept or to be taken, or whatever structure is there is going to be doing its thing, stopping, holding, or fueling price. But you want them to be visible for as many people as possible, traders, that is, not just non-traders, because obviously they're not going to be looking at the chart if not they're not traders. But yes, so that is so it depends. So the steps between the alignment, in my case, is around 4. But that's on my trade plan. It does not need to be all the time that case. We know people who use bigger steps, and it's perfectly fine.
Yeah, I've always heard a factor of 5 plus or minus, 1, basically, depending on what you're working with, or higher. So you want the time frames to be differentiated. I personally use the daily and the hourly, so that's quite a big difference. But I think, to your point, is that you don't want them to be too similar. Even like the 5-minute and the 15-minute, for example, those don't have enough difference in what they're telling you. You can still design a strategy around that, but I think that's the idea.
Yes, exactly.
All right, I think people are really interested in your GBP take right now.
Let's take a look at that pound dollar. Let's okay, before CPI. So that's a tall order.
That's coming up. We have 2.5 minutes.
Let's see if we can do it. GU is a buy. That's it.
Okay.
No, I can't do an analysis that quickly. No, but on the higher time frames, we do have reasons for this push to be much lower. We do see that the market does seem to be have hit some kind of an inflection point there, and it's not weird, because we do have that monthly order block and we do have that weekly. You see how beautiful price react to that. So it makes sense on a higher time frame as well for have a much deeper retracement, but that's really high time frame. So in the process, there's a lot of time, there's a lot of space for price to do many things. But keep in mind that this retracement still perfectly is able to go even lower, because you're bouncing from a monthly. So this weekly, even though it is a weekly bullish order block being retested, it's a fresh one. It's a weekly against a daily, right? So gotta always recognize the hierarchy of the time frames. In this case, that weekly, in my mind, even though I will try to get along from it, I understand that because it hits something much bigger, it can, it is threatened, basically. So that's the only thing I can say on these higher time frames. As I said, we are in a fresh order block on the weekly right now. And going to the daily, we do have an order block right here. It is not part of a quasi, and it's not fresh. So it's not something I would want to take a trade from, use as an area of interest, to take a signal. But I do recognize that it is there. Other people will be seeing it, and I know we're likely to have. I think it is, quite likely we could have at least a little reaction from that area before price decides whether it wants to actually reverse or just continue and move lower. I would, at least also because we're within that weekly order block, expect some kind of a bullish reaction from this structure we are in. And if we go even lower, we do have an H4.
Here's
And
CPI.
CPI
It's
coming
just about to
in.
come out. Yep. There we go.
Whoa, that is indeed very interesting. I didn't match. I couldn't raise. Very nice. I like that that reaction. How many pips are we talking about? This is 21 pips in the first minute candle. Very beautiful reaction. All right. So do we have something? Do we have like the fact the fact that we already had this reaction, right? We went all the way to that order block. Beautiful, very technical. Coming from the supply area, to me, the strength, the movement, right? It's no longer the first attempt, even though you can't see it on this time frame. If we go to the 5 minute or maybe the 15 minute even, right? This is the move that I was looking from. This is it. This is the move that I was looking for based on this H4, H2, and H1 that were here. Because that move already happened, I understand that this order block is now weaker. This area that I have to use to horizontal yellow lines, that the reason why I took that trade. I understand that it's weaker. Doesn't mean it's a guarantee for anything. Nothing is, 100% certain. But I understand that now that it already did what it was supposed to do, now the market is more likely, or at least the odds of price going through it and invalidating are a bit higher. Okay, so just considering the sequence of the movement is very important. It's still valid. The order block is still valid. It's still a quasi order block on a quasi. So technically, my trade plan tells me that this is something that I could still trade if I didn't have a signal yet. But I understand, since I see this, that movement already happened. I don't want to be a part of it. It's the same thing as a second attempt of an order block. Not interested anymore, because the signals are of lesser quality. Even though there is still work, they are going to have a different stats to them, and I'm only interested on that initial move, the initial movement which we already had.
You want to keep it fresh.
All right, so wild indeed.
What's interesting is really didn't the S&P, the indices are at all-time highs, but really didn't do as much on the S&P as it did relative to what you're seeing on the GBP USD, at least in the exact initial move. I was looking at the 1 hour though, actually, as I'm saying
1
that.
hour?
So maybe
Okay.
that was part of the issue. I think when you had your chart up, was it on the minute?
1 minute. 1 minute.
Okay, yeah, and maybe that's why it didn't look as impressive on the indices. But now I'm switching to the 1 minute, and it is a big range. But sometimes CPI can be, it seems like even bigger. Looks like maybe 14, just under 14 points, maybe something like that.
Yeah,
on the
let us switch to your screen so you can see where your chart, where you're measuring and observing what you're saying.
Just under 13 points on that 1 minute candle. So, that is a pretty large range, but it wasn't maybe as violent as sometimes that we see. So, was that it for your GBP, or did I interrupt your GBP analysis?
No, you didn't. CPI did.
Okay, sorry.
I'm
go back to that.
Whoever scheduled that CPI, I'm gonna tell them.
Right. It's very
you gotta,
inconvenient.
Yeah, it's very inconvenient, man. You gotta be. They gotta schedule this more reasonable. Interrupting my flow. All right, so let's come back to GU. I'm gonna switch to, of course, GU. What we were talking about. We'll come back. We had a question about the by DJ about the daily order block within that weekly, and I'll come back. That's a very good point, DJ. very well seen or observed. So there is an order block here. It's not fresh. It's not part of a quasi. So I automatically, when I see that, when I assess that, I demote it to be just a regular order block, right? It's not something I want to be trading from. I know it's there. I could still use it because I know there's a certain reaction that we could expect from it, but it's not going to be a signal of my main strategy. It might be something else. So this arrow was, it's not based on anything, just the fact that we do have that order block there, and you would expect that that's going to have some kind of a reaction, and this CPI could be just what it was waiting for to make that move, and it seems to me that it's actually in that direction so far as well. So if that's the daily, the weekly, we are in a very interesting area, but it's not there. The signal to me is not there yet. So but if we go to the lower time frame, however, we did have an order block. I talked about this on our like 2 hours ago, that there is a fresh order block on the H4. And actually, I need to mention something before we go to that. There is an order block on the H4 that is actually very, very interesting, because that was the order block from which we had this huge move that is visible even on the higher time frames. So this order block to me is the order block I want to be catching, whether it's going to be, it doesn't matter if it's going to be today, this week, even next week. The next time around price comes to this order block, I'm going to be going down as a sniper to lower time frames to try to catch that reversal with alignment all the way, because if I can catch in some moves, I can leave some positions open, because I'm not only trading the H4, I'm trading probably a daily as well. I would have to wait for that daily to actually happen. It's not really there because that order block is not something that I would be using, but I'm assuming that I would have then a daily order block as well, a fresh one, and we have that weekly right here. Right, so I see that potential already coming from afar. We have an H4 daily, weekly possible to move, and we can understand, if you put put things in the right perspective, if this weekly order block is going to push price, this would be too conservative of a move, because that's just within that order block. We can expect price to at least try to go into something of a similar time frame, right? A weekly order block, perhaps something like this, something at perhaps that daily. Who knows? We can expect, and this doesn't look like much on this time frame, but we're still talking about almost 300 pips, right? I don't know if it's exactly that's where the entry and the targets will be, but we're talking about hundreds of pips in any case. So that's the reason that I'm very interested in watching, not right now because we haven't interacted with this order block yet, but in the future, maybe today, maybe later on, tomorrow, later on the week, doesn't really matter, right? So that's one thing, but we haven't reached that yet. We do have another structure, which is that fresh order block that I mentioned, which is that. And I would expect, if price were to come back, and I did have an area here on the H2 as well, and I think it was the H2, yes it is, where we have enough alliance or alignment, I should say, not alliance. What am I saying? Defense alliance. No, not defense alliance. What I would be looking for is this quasi right here. This is the left, the head, the neckline, the left shoulder, and we're coming back. Actually, I need to adjust it because of the news, it has moved. It's expanded somewhat. And let me see if it is still viable, this structure. It is. And the area would be this that I would be trading. Right there. Right? So that would be the area, and only waiting for price to actually react from this area. If it does react, then I could get in on a trade from this area and then continuing to this high, and if not the opposite direction in H4. But it looks very clear. Let's go to the lower time frame. Perhaps we can see this is clearly not reacting to that order block. Where that's the importance of having a confirmation in your trade plan. To me, at least, I need that. I need a confirmation. I need price to actually respect these order blocks before I can actually enter, because my stops are very tight. So I need them to be, I need price to confirm that they're there and they're being seen and being respected. Otherwise, I don't want to have anything to do with them. Let's see. We do have an order block here, which we could be seeing some action as price comes in. It is already beyond 2 minutes after the news, way beyond 2 minutes. So it is safe to trade on the high stick account. Do you have any, Deanna, do you have any, amounts of, length of time you wait after the news, things to calm down before you take a trade? Do you have any rule of thumb?
No,
Anything?
not at all. It just depends on what, I don't want to be caught up in the super high volatile, except if I already have a trade on. But in this case, or in any case, I don't have a restriction personally around the news. But it typically is not, I'm not entering a position right at the news, or, even typically immediately after. I might do it soon after, but I don't have a specific time guideline, just waiting to see what price will do. And at least on the S&P right now, it's doing a whole lot of nothing. Kind of had an outside hourly candle, and price is back where it kind of had been since 1 to about 4 hours. It's just around the 63.30 level or so. So right now, nothing has really changed. There was kind of like this explosion of movement, but nothing actually fundamentally changed. And gold is starting to move lower, though. So looking at gold, price is heading toward yesterday's, so the previous day low. I don't know if it'll get all the way down there, but we're starting to see price make a move down toward that level as well. So if that happens, this is kind of the reverse of what we had talked about last week, I think it was. And this is the same thing that you can look for across assets. So I'm personally looking at gold and especially the indices, but this can happen across assets. So this pink line here is the previous day low. If price goes below the previous day low and takes out some of that liquidity, that's going to be an area I really want to pay attention to. If it stays below there, and continues down, starts to, like we used the word last week, sort of starts to reside below that previous day low, to me, that could indicate that price might continue lower. I'm not so much interested in that, but if it dips below and then starts to move back above that previous day low, that could set up a really high probability long trade. But you have to be patient on these, right? Especially when you're looking at the daily, it's going to take some time. So there's nothing urgent to do here. But this can be a day trading, just because you're looking at the day time frame, the daily time frame. You can still use this for intraday trades. So right now, I'm not seeing a whole lot at the very moment. Flipping back to the S&P, and same thing. We've got this kind of all-time high marked out, this little sort of triangle pattern, and price is just kind of making a decision here. So on this, we are well above the previous day high still. So price, I had marked out this level last night if price was going to stay above that level, and it has. So right now, price is pretty extended. I'm not really seeing anything that I can do right at the moment. But those are the things that I'm watching for and looking at on gold and the S&P.
Perfect. Nicely. I'm gonna go back to GU because we did have a possible area. That's we do have an order block right there. It seems to be that it, my expectation, and perhaps everyone's expectation, is that, with all that aggression and all that volatility that comes with CPI and other high impact news, that little flimsy 5-minute order block is not going to hold. And you're absolutely right. These structures, even the hourlies, they don't stand a chance against the high volatility. However, if price action confirms, I still take it, right? I put my opinion aside and I take it, because the reaction, the confirmation that I'm waiting is actually telling me that there is something there, that even with the volatility, the market is reacting to it, and is likely, it has a chance, not likely, it has a chance of reversing there, because I see that reaction, and my job is only to react on that reaction. I know that's using the same word for the same description, but it is getting in, using the signal that the market is reacting to that structure, and that's my signal. If it is reacting, it's not a guarantee that it's going to reverse from there, but it's my best sign that I have a chance, and the chance is still there, good enough. The probabilities are good enough for me to get in and take that trade to wherever it may lead. So let's see. We do have there is an H1 order block as well. Someone said something about the quasi not being very clear. Well, let me see. Who was it? I think it was. Let me see. Let me put that.
I saw that back there, and I think they were saying understanding what a quasi. Yeah. Oh, yeah, CPI was wild.
I would say if you can see Quasimodo, I would say you have to set your TV, your resolution better, because I don't know where I was gonna go with that. No, what I was gonna say is that perhaps no problem. I will use that. I will show you.
I can understand that comment, though, because there is not one. There are many ways to do a quasi, because time frame comes into effect and all these different things if you're looking at different time frames. So I can understand where you're coming from. I think one of the things that Victor does really well, one of the many things Victor does really well, is that he has a very precise and defined way to see the quasi. So if you can take notes, if he gets into real specifics of what exactly a quasi is, you could maybe start with his definition of a quasi and then determine if that is what you want to, how you want to define quasi, or maybe you like what he does, but you want to do it on, the 30-minute instead, or something like that. So if he can give you like the outline for what a quasi is, you can use that to your benefit to learn from his explanation and then modify.
Yes, I think you hit it on the head there, because this is my quasi. It is, my rules, my definition. And even though I made those rules, so I really think that is the way to do it. It does not necessarily have to be your way of, identifying or defining that quasi. In short, what a quasi is a head and shoulder. This time around, I'm gonna mark it as an inverse quasi, right? Because we do have an inverse. This is basically the quasi, right? It is an inverse, is a variant of an inverse head and shoulder. The head and shoulder would be something like this, with a lot of symmetry, having inverse shoulders. And the basis, although the basis on the top, it's because it's the inverse, of course. This is the head and shoulder, and that would be the quasi. And this can be much, because it's a quasi, it doesn't have to be at all symmetrical, right? So this is basically that. This is, to me, if you define the quasi being a lowest point being the head and a significant push, and you can define that significant push however you want. But obviously I have a couple of rules that define this for me. Then it doesn't matter how it looks, as long as it meets the criteria of a significant move, however you may have defined it. Then you have the basics to know where the neckline is, and that's what you want to be broken, and then price to come back. In my case, I'll wait for 50% retracement first, right? So I'm going to be marking this and that from the head to the highest point, in this case of the inverse structure, the pattern. And after it comes back, I'm going to be looking here for order blocks for entry. Those are called entry order blocks, right? Very easy, nothing too, too complex. So in this case, to answer the question, what I see is this. So we do have, this is the head, right? That's the head. Right? And to me, in my definition, this is the highest point from the significant move, right? How I exactly define that, I just say significant move because there are a couple of things that I don't, share the exact definition. But the reality is, it doesn't matter. Just choose a significant move, however you want to define that, and test it out and test a couple of them until you find something that makes sense. So that would automatically mean the lowest point before that significant swing high is going to be the left shoulder, and this point is going to be the neckline. It breaks it here, and after that point, I'm going to be starting with the quasi. That's the 50% retracement all the way from the top to the head, and I'm looking for structures below that 50% retracement, between the 50% retracement and the head, and I identify them, and I wait like a sniper, right? The sniper doesn't get in and start shooting all over the place. You get in, you get position, you wait until the target is in your viewfinder, I think you call it, and then you pull the trigger if you see what you need to see, right? So I still wait for my confirmation, and that's the moment I hit the trigger. And if you were to see, this would be the quasi.
Mhm.
Doesn't look at all. It doesn't look symmetrical at all, but that's the quasi. And to
And
me,
you don't care
go ahead.
about that, right? You
I
had
don't
said that
care at all.
it
Yeah,
doesn't
I don't
have to
care.
be symmetrical. And there's a
Exactly.
comment, Papa Pips is saying, I believe the second CH is character, change of character. It's important to know that Victor calls this a quasi, but there are many, like for me, I would call
Sure.
this a market structure shift or a market structure break. It doesn't, those are just, vocabulary, those are just terms. But the
Exactly.
idea is price is going in one direction and then makes a strong, definitive move in the other direction. And that's what is the marker for him.
Yes.
And so I think that's important.
You could define it as well as
Oh,
the
good.
break of a significant swing point, right? This is the significant swing point to me, and the break of it, that creates the quasi. If you don't have the break of that significant swing point, I call it neckline. You call it significant point. You can call it. It doesn't matter how we call them, as long as we understand what we're talking about. And when price comes back, it gives me a good entry, and I define them, where I can actually define my entries. And there are rules as well when I start looking for. I don't consider this to be a tradable quasi or pattern. There is a moment, a time, a window of opportunity after which I'm no longer interested, because the data tells me that it's not there. There is. It's not supposed to be. Those are just the rules of my trade plan, and the trade plan is based on all my observation through the years, trial and error, back testing, until I get to something that I don't doubt it anymore at all, because I live by it, because I've seen it, I've measured it, I see it all the time. That's the way I should be trading, right? And
Mhm.
since everyone else will have different kind of rules, my rules and the things that I do, for example, where I put my stop, where I put my TP, because your rules are going to be different, it doesn't make sense for you to know to copy my the way I trade exactly that same way, because it may not be the adequate, the optimal way for you, right? Even though you're trading the same quasi, for example, if I always put my stop, let's assume that I put my stop, I don't know, down here. That's one rule. That may be good for me, adequate for me, but it may not be good for you, because perhaps you're not looking for, the big moves. Perhaps you're just looking for a little pop, right?
Right.
Maybe you're a scalper. and you're scalping this pattern. But that means that perhaps you may not need to risk that much, or maybe you're a swing trader and you're looking at this and you need a bigger stop, right? It all depends. Once you start tinkering away with certain rules, and because I don't give them out, you'll have to figure them out by yourself. By definition, you don't want to use mine exactly unless you have everything I use. And even if you did have every rule I'm using, I'm pretty sure you're gonna have different results, because
Yeah.
it took me years to be able to implement it the way I did. And there's also a psychological component that I grew, I learned to have during the years. And if you just have the rules and you don't have the process that I had, probably will not have the same results. And as we
Yeah.
can see, as while we're talking, the market is reacting before that order block on the 5-minute. It is within that H1 order block, though, that possible entry on the H1. Personally, I don't use the H1 solely. I go to the minutes to get my entries. But that's just me.
Yeah. Well, the good news is Dubicor is saying excellent explanation. Finally got it. So now you can use that to your advantage. You know how to define a Quasimodo, and you can take Victor's, kind of the skeleton he gave you, and then define it how you. I think there's a tendency, we all do this, but there's a tendency when you talk about something that you do, how you do it, we talk about it in definitive terms, like this is how you
Yes.
define a quasi. That is how Victor defines a quasi, but sort of the nuance can be your own. So for example, he said the highest point related to the significant move, I think is how you said it. But you could do a swing low or a swing high, and you can even use technical not indicators, they're tools on TradingView that will define the swing high and swing low for you. And you could say, you know what, I'm not comfortable doing it any way other than just perfectly systematic. So I'm going to use that. And Stephen is also saying perfect explanation as well. So great job. I do want to address a series of comments, though, real quick, if it's okay, Victor. Dwiz is in the chat with us this morning and is saying, he's 15 and has been trading for about 4 years, and is wondering about a giveaway. As far as I know, there is no giveaway today. But I think that is so great that you're 15 years old and you're trading and learning and experimenting. And as much as you may not want to hear it, probably paper trading is the best place for you to stick around and really, over the next 3 years, continue to hone your skill on paper. I know that paper is not nearly as exciting as a funding company or your own personal account, but it is a great place to learn. And if you take the next 3 years to really prove your process and really refine your process on paper, you could have an excellent track record and eventually come up with, the $60 or whatever it is, pass your first month and be on your way to earning payouts. So you're at a great spot where ideally, hopefully you have no mortgage and you have no kids to feed and you have none of those responsibilities. And so you can really just do well in school and continue to focus your energy learning how to trade and really defining that process and refining it. Because like Victor said, it took him years to come up with a system that was intuitive to him. You have that opportunity to do that right now. So hang in there. I hope that helps. You're getting a great head start. Yeah, like UK Swinger said, not Swinger. Swing Trader said, highly commendable. Little slip there. Highly commendable. Congratulations. I was 36 when I discovered trading. Yeah, you're in a great situation. But it is hard to be patient and stick to the paper trading, but that is a great place for you to be until you have that $60 to go ahead and buy your own account.
Yes.
And you feel more responsibility for it too when you have to pay for it. So that can be a good thing as well.
Yes, I got a couple of things to say as well to Dwiz and everyone else who is, in the same position, waiting perhaps on that lucky day you win an account with us. One thing is, you know, trading takes a lot of time, and I think getting the account quick shouldn't be your priority necessarily. There is so much work to do, and that's actually what Deanna was just saying, right? Paper trade, because it takes anyways so much time, and you have plenty of time to either watch our stream and have a chance of winning a giveaway, or be part of our Discord community where we on our workshops we have giveaways of hub credits, right? And you can stack these up, you can accumulate them, and the smallest account is $39. I don't know where, where you're based, what the country you're watching us from, but I mean 39. I know some countries that's still a big amount, but you have plenty of time to save that while you're trading, while you're learning to trade, and it's time well spent, not spending money first, and working on your skills, because at the beginning it's all practice. At the beginning, your first account, I don't want to be negative, but it's, the chances that your first account is going to be the account you get, the big payouts from, it's possible, very possible. But there's a whole process where you need to learn a set of skills. It's going to take many, many months at least, if not years. The chances that very first, if you buy it at the beginning, is going to be the account, is not exactly very, very high. So by all means, keep trying, keep learning, and stay with us. Maybe you have a chance and join on the Discord. Perhaps you can win some credits there as well. That's what I have to say, and keep hitting at it, working your way up to success. It's very possible.
Yeah, absolutely. And like born in 2944 saying 39 is so much in the third world. That is very true. But I think the big, money aside, it's like the best thing that you can do, that all of us can do, is try and figure out the market outside of real money, because you can definitely lose a ton of money in the market if you are trading outside, which is, obviously one of the perks of using a funding company, that when you lose money, it's not more than you can lose, right? There's an inherent limit set in what you can lose, and so it's different than when you're trading your own money, where you can actually go negative. So it is time for me to take off real quick. There's a comment in here about the psychology of a profitable person versus not, and what's the difference. I would love to know that. I think, the definition of profitable, the definition of a trader, all of these things are so fluid still. That I don't think that I have not seen any kind of credible research on specifics of that, but I think that would be really interesting. And, it may be in the future, after prop firms have been around even longer. I know brick and mortar have been around for a long time, but this is kind of a new era of funding companies. I don't think that there is anything that I have seen along those lines. So, anyway, it was great to see you, Victor, as always. Great to have everyone in the chat. And you can find me on Twitter and on YouTube if you want to connect in between sessions. Otherwise, I will see you all next week. Have a great week, Victor.
Thank you, Deanna, for everything you do for our community. The chat is going crazy with your presence, so thank you for that.
Take care. All right, we'll see you all. Bye.
Bye. All right, so let's see how. There you have it. Let's check and change a couple of things. So we are in. All right, there. All right, so in picture, that was what I was gonna say. I'm gonna check the chat to see what you guys are up to, and do you guys have any questions? Perhaps you want me to address. Let's see. I'm checking. Are you taking requests? Yes, I am. Mind Matters. Yes, I am. Just say your pair, and I will take a look at it. It does take a couple of minutes to do my whole analysis, but I can surely look for structures or other things that I might see and let you know about it, and so you can perhaps take advantage or at least consider it. Right? We remember this is not a signal service. We are not telling you to do anything. It's not financial advice. It's educational purposes, right? That's the whole idea. All right, so we have Mind Matters asking, can we do Swiss yen? Yes, we can. All right, so let's take a look at Swiss yen. All right. Right, I'm gonna do a top-down analysis. Ooh, this is looking nice. Right, so it is breaking. It seems to me, from at least from my price feed, all-time high. But that time frame only goes to 04. Okay. All right, so there's really nothing to say other than we came from an order block, had a immediate retest, but that's on the monthly, so it's not very relevant for our current situation. Let's take this off like that. We took off this line, so I'm gonna be eager to see how price reacted to it when we were breaking that level. That's in the monthly. There isn't really a lot to say other than just market is very, very bullish. We did have a quasi here. That quasi never. This is the reason, right? This is the reason you want to be holding. Look at that quasi, right? There is an entry order block there, but you can clearly see that the market did not react to it, right? This is the reason, right? Not all quasis are going to work. By definition, they can't, because the market, when it breaks out, it's going to break structures. It's going to break those reversal structures. So you don't want to be trading the quasis blindly. All right, so we do have that. Let's see. We have on the weekly, there isn't any structure to use at all other than this. At some point in the future, we might get back to this order block, and we could see this function as a demand area. DJ asking if I always use Oanda price feed. Yes, I do use that on the lower time frame. I totally agree with you, DJ. On the lower time frame, I prefer other price feeds, like the one from Pepperstone, for example. Oanda is not the best on the very, very low time frames, but on the higher time frame, this is the one that I use, and it fits best with the way I trade. So let's see. That's on the weekly. There isn't really anything there. There's a break, and it's a clean break. No retest at all so far. All of this, we had a range, and we broke out of it, but it's not relevant to me anymore. It's a very clean breakout, and we are creating bullish order block. I'm going to mark them. Although you only need the last two really to trade the way I trade. Let me check. This is no, that's not an outside bar, but this one is. You're creating bullish order block. They're not even being retested. That tells you how bullish the market is. The market is very bullish. You need to understand that by the fact that it's not retesting any of these bullish order blocks as they are being created. Very bullish. Okay, so now we have a daily order block there. There isn't anything to trade. This is so one-sided. All right, is this the last order block? Actually, there is one here as well, but because it's a borderline order block, meaning it's just that's not the daily, but a 4-hour. I'll have to check another. Let's see. Let's mark this as red, and then let's use this one as well, or Pepperstone perhaps. I'm gonna use this one and IC markets. All right, so I'm gonna put them aside, side by side, so I see what how they're looking when we're looking at the same structure. So I'm going to test this order block to see if it is an order block on all price feeds, right? If it isn't, then I don't want to have it as a then I don't want to be trading it. Let's see, this is the open 134, the close is 135, so that is valid to me. And this one is quite different because I knew that. That's because of the time of the server of the price feed. But in any case, this is an order block that I would be trading. I just confirmed. So that is the last order block. If price were to come back, that's where I would want to be looking for a long. But it doesn't seem at all that it wants to come back. On the H2, there isn't anything. Since I trade quasis and the reversal, price needs to come back to these areas for me to get a opportunity. What I do see is, of course, I can see it here. There is an outside bar here on the 1 minute, on the 1 hour. That could be something to trade. It's not exactly how I trade, but this is something that I would be able to trade if price were to come back, and I have more confidence for price to continue, then I'll be getting in that retracement. But it doesn't seem at all like it is interested in any retracement. So basically, I would have to wait for price to retrace into those demand areas, and it's not doing that. So there isn't a lot for me to do. Any opportunities. The one thing we can for sure talk about is the ATR. On the daily time frame, we can see that the ATR is currently at 105 pips. So let's mark that. 105 from the low of the day, right? So 105, basically around 186.14. 1 pip below, so 13, 186.13. That's where the 100% ATR currently is. And since yen and Swiss have not any high impact news today, let's see, this is the ATR, so I'm gonna just use it as a target, something like that. It's not the target, but just a placeholder for that level. Okay, so that's let me check on the background here if there was any no Swiss and no yen news. So that means that I would probably consider this a regular day. So I understand that price is likely to going for that ATR level at some point, right? To me, that tells me already that it's not overextended. So I should not try to catch the top from here. If anything, I would want to see, after breaking that ATR, forming some kind of a reversal pattern. And that's when I want to be doing that today. If today is going to be the day I trade this, I want to have it extended and then start showing reversal patterns telling me that it's going to probably come back to some kind of a mean, even if it's only coming back to that 100% ATR or some other structure that I can trade from. But that's not the case yet. A very bullish asset for that person who asked me, but I don't see any opportunity here. But that's maybe just the way that I trade, right? I want let's see. I want the trade to be. Let's see. I want price to come back into that demand zone for. Let me type something here in the background. All right. Yes. Yes. So I'm all right back. So the way that I trade from buying from demand and selling from supply, there isn't anything here. We're uncharted territory. There's nothing here. Price is on a price discovery mode, and to me, it's my time to just sit on my hands and watch price, but nothing really to act upon currently. If I were to go on lower time frames, I mean, I could, scalp this, but I would be doing the same thing, waiting for price to come back to that order block on a lower time frame, and look for reasons on that order block on the lower time frame. Maybe a reaction, and then I can scalp, understanding that perhaps the market is going to continue to that level that I just marked, and I can scalp, the reaction that price is going to do on these moves as it goes to that ATR. That's one thing, but that's not the typical trade plan that I show. Okay, so all right. No, Vinicius. Today, Ashley is not available, and he'll be joining us soon again, but not today. Vinicius, thank you very much for that. Being so pending, and I know you guys like Ashley because he is such a source, such a good source of knowledge and experience, and I really enjoy having spend time with him when he is with us. All right, so let's look at the chat to see if you guys have anything else. Oh, someone asked. Let me check this. Someone asked if where was it? Someone asked about the. Okay, I got it here. It was DJ, I think, about that daily order block on GU. Okay, let's take a look. GU daily order block within that weekly. That we have this. Yes. So I think I talked about this one. I don't know which one you're referring to. Is it the yeah, it is this one. There's only one. I did mention this, that it is a part of it is within that weekly order block, and the weekly order block. Let's looking at the weekly. It is fresh, right? It is only. It's an immediate retest. As soon as it was created, the next candle, it already started interacting with that weekly order block. So it is fresh by definition. And on the daily time frame, if we measure the amount of candles that was printed after the creation of that daily order block, we will measure, we'll come to 14 bars, right? So to me, and now you can have, this is what we were saying before, you can have your own rules. You can define the fresh order block to be different, another value. You can have it, be below 15, below 20, below whatever number you found out in your data to be adequate. But to me, this is too much time, right? So, other strategies, I know, for example, other people, they want a lot of space or time to pass by between coming back to certain levels, right? Like trader Tom Dante trades, for example, he wants a level to be very obvious, and it needs enough time. I don't need that, right? My strategy doesn't thrive under those conditions. So that's why I have to define exactly how many candles need to be in between its creation and the retest. So to me, this daily order block it's useful, but it's really not something that I can't use. I can't use it, at least not in my main strategy. So I hope that answers the question. Let's see. No problem, DJ. We try our best to save those questions as you guys are, putting the time, putting the effort to write in the comment in the chat. And we try our best. There is actually, you guys perhaps don't know, but as the messages come in, I or someone will mark them, and we have a certain section where we try to store them until there is an opportunity to discuss them. And sometimes, sadly, we run out of time, or the flow of the conversation is such a way that it is we don't get a chance to discuss them. But we really try to do that as much as possible. Okay, all right. The M1M chart, daily bias insights. I'm not sure what you mean by that. If it's part of a ongoing conversation with the chat, or if it's something that you just saw in the um, in the on the chart that I was showing in the analysis, and you wanted to. But let me know which one it is. Then I'll be happy to talk about that. Okay. So let's come back to that order block we were talking about. We are right there interacting with that one of those order blocks that doesn't look at all, and because of the news, the chances that a tiny order block like a 5 minute, that the price is going to reverse from that order block on after a news like this is not very big. I admit it's not. So I don't have high hopes that the market will reverse from this order block, but that is something. I mean, if it does do it, you wanna go on board. Meaning, I would be looking for something like this and put the stop. Let me look at the quasi. I would, in this case, put the stop a little bit below the whole structure, and just have one go at it, and target at least the high of the structure. That is one, depending on the time of the day and how quickly it goes up. And eventually, if there's enough momentum and time and ATR space, etc., I would be comfortable targeting this. But if I see it slowing down, let's see if it's very powerful, then yes, I would have this on. But if I see, for example, that there isn't enough time is running out, and let's say it does have a little push, but then it lingers on and on and on. In that case, we need to manage our expectation and just expect something before that top to be hit as the highest point, and now I have to go to the lower time frames to find that area. But I will just take that as the target, or adjust it based on how the market behaves after the entry. Okay, so that is a different. Those are the rules that I do apply for my trade management. The basis is a set and forget, but depending on the time, on the momentum, there are rules at a certain moment I need to check back and see, okay, is my expectation, my TP expectation, really reasonable? If it's not, then I have nothing to do. I shouldn't be expecting something that's not reasonable. Okay, as a trader, you shouldn't do that. At the beginning, you don't have enough information, so you can use set and forget, without any kind of trade management. If you have the data, then by all means do that. But there is a little bit of edge to be gained by, after you have more information, do some not intervention, but some reassessment, reevaluating whether or not that TP is still reasonable. You want to position yourself always in a high probability, the TP being in a high probability place, right? And if you later on assess that it's no longer at a high probability, then there's no reason for you to leave it there. All right. Dollar cat, someone asking, and also the dollar euro dollar. Let's take a look at that. So let's certainly take a look at that. In the meantime, I am there. Okay. All right. perfectly. All right, so we have, let's take a look at dollar CAD. Let's break this down. So we have the on the monthly time frame. I'm not gonna go analyze all the structures to the left, just the most relevant ones, right? So are there any fresh order block or any quasi that I can trade from, right? And nothing yet. This is the neckline, and it hasn't broken in yet. This is the head. This is the possible left shoulder, but it's not there as it hasn't broken anything. And there isn't anything here as well. It actually closed above it. So invalidate any possible quasi that could have been in the structure to the left, right? It already closed above both of them, meaning that there's no sense this whole structure, this whole range in my mind has been cleared already. So I'm gonna take them away, right? There. All right. So in the meantime, if you don't forget, like our stream, subscribe if you think this is helping you, because that's how we grow. Okay. So I don't have any quasis and no fresh order block. Basically, this time frame is not telling us anything useful. We did have some structures here, but both of them has been taken out from previous analysis. So let me mark that. We did have we didn't have anything. Let me take that off. Okay, so we do have that line from previous high that was perfectly reacted upon, but I think it's no longer relevant. The weekly time frame. What does the weekly tell us? Do we have a quasi? We don't have a quasi. Bearish quasi, that is, and a bullish one? Neither, right? Nothing. The neckline would be here for the weekly quasi, and it hasn't been taken out yet. Do we have something to the left? That could be something interesting. Yes. And yes, I do see it now. There is a quasi, a bullish one, a huge, I might add, which is from this point all the way to that point. And do we have, is this tradable? So we have one structure here. Let's see, do we have, I think it is not tradable because it has too many order blocks, right? So this is one. And this is number two. Let me double check. Yes, that is number two. And number three would be up here, but I can already see that it has been taken out. Okay, so that's, it is there, but it's already been taken out. There was a little reaction from it, but it's already been invalidated. So this is the area that I'm interested in. Oh, nice. Look at that. Look at that reaction. Ooh, love it. All right, so we do have a quasi, a weekly quasi, which has a very nice reaction. Who was it that suggested this pair? Let me check. Let me thank this person because it is a very nice setup to talk about. Let's see who it was. Van Alven. Thank you. Thank you, Van Alven. All right, so let's keep on breaking, keep doing this top-down analysis. And what we have here is a fresh order block on the weekly time frame being actually just a regular, not a entry, but just a regular weekly. And it is giving us another one, right? Two on top of after each other. The market really is trying, not really succeeding at it, but is trying to to turn around. I'm going to use the second one as that is the most recent one. It's more relevant to be using. It is after the weekly order block has been tapped into. So technically, you could use targets that are relevant in this time frame. The next time frame, the next structure on this weekly is this. That could be used as targets. This one, as well as this one. And actually, there is a there is a much bigger structure, but I'm not going to be using that because it's too wide. This is much lower, so I'm going to be using these are the two possible TPs, and obviously you have the whole structure as the ultimate TP. Okay. All right. So those are the TPs based on the weekly. Let's go to the daily. Do we have a quasi? Do we have a quasi? Yes, we do. Ooh, this is beautiful. This is getting better by the minute. Love it. Love it, Van Alven. Daily quasi, yes. And what do we have here? What a beauty. What a beauty. Look at this. Breaks the neckline, comes back all the way here, and has that reaction. Beautiful. This is a thing of beauty. Actually, the quasi, the opportunity was in here when price were coming back to that order block. That's when we the optimal moment to get into this trade. We do have some structures here. I think this is still valid. Not I think, I know it is still valid. And we're talking about this daily order block. So if I were to trade this, I would be looking for this TP. Based on the daily, I'll be looking for this TP. It's not marking yet, so let me use another one. I'll be using this as the TP. And I'll be using this order block as my entry, well, not my entry order block, but my the structure to start the alignment. On the H4, let's look at the H4. What do we have? Do we have a reason to go long from this daily? Yes, we do. But this no longer fresh. Do we have a quasi in that case? Actually, we do. This is the entry order block on. Let me double check. Yes, this is the entry order block on the. It is a bit not very clear, but it is still. This is the entry order block for a H4 quasi. There. So that is the area. See how I'm refining that area, understanding what the market is trying to do with the higher time frames, with the daily, for example, with the quasi reversing from this bigger structure, possibly trying to reach this structure above us, but in any case, going for that TP, and I go to the lower time frames to fine tune my entry. In this case, this wouldn't be the quasi that I'm trading, but within the quasi, the understanding that the market is eventually trying to go to that area. At least that's my assumption, okay, based on the whole structure here. Okay, so I have that on the H4. This is a very good example, actually, to learn from. Okay, so we do have a quasi. This is the neckline on the H4. That means it doesn't have to be, it doesn't expire, doesn't have to be fresh. I can still keep trading it, even though it's not the first attempt. But we still need to, let's see, that doesn't help us. Maybe the H1. There is a quasi here as well. That doesn't really help us. No, that doesn't help us. This is the order block. It doesn't help us. So, yeah, there isn't. I can't refine it any further. There is this order block, but technically, the order block is much wider. So it's let me apply my rules to it. So this is how many pips? 44, and I already know that that's too big of a structure. So that makes sense to me. And then I go to the minutes to actually catch my structure. All right, so that's on the 5 minute. Do I have something we can use? Let's mark this. Actually, let's put on some music. We're almost over, but let's put on some music, some background. All right. Yes, so I would still consider, I would look for some other reasons to get into this trade. But the reasons that I have that I can come up with is this. Since the H1 is too wide, we need something else. All right. All right, so that is the reversal pattern. It is within the structure, so it's not something. It is for lack of a better structure, basically. But this is the most refined that we can make this area, and the neckline being here on the H. And this is the 15 minute. Okay, so let me go to the. Yeah, I think that's good enough. Right, so that gives us how many order blocks? One here. And that one is one big area, still one big area. Okay, that's as good as we can make it, I think. It's not even better. I think the H1 is, we just leave that. Much, much better. Actually, what I would, let's see if on the 5 minute we can catch something. That's going to be a 5 minute structure. And let's define this a bit more refined, a bit more sharper. There we go. That's the CPI, of course, causing all these movements. There, this is the area. All right, this is the best I can do, I think. All right, so I'm gonna be looking at the 5 minute and take my trades from that area. There we go. All right, I'm gonna show my terminal because this is not the typical entry, but it is good enough. It is valid for me to take a trade. So I'm gonna try to see if I can do that in front of you guys. We still have 22 minutes, so let's do that. I'm going to switch. Let's see. Just a little patience. Not going anywhere. All right. There we go. All right. So that's the that's my terminal, and let's switch to what do you guys say we take a trade from here? It's not exactly let me move it here. All right, so for those who are not familiar with this is the position size calculator, and you can use. I haven't taken any trades yet. This is just getting in on the trade. This is on the 5-minute. Basically, I would look for a much sharper entry, but I'm gonna be looking at the. I'm not gonna switch completely, but I'm going to check on my trading view what level I want my stop loss to be. I'm gonna put it at 65, and we're gonna get an entry here, right? So I'm gonna put it at 36.65, right? And I'm gonna risk here. Let's risk 100. Okay, so that's a very small, but that's because I don't. It's not the typical entry where I look for those very tight entry order blocks where I can get very good entry from. So now I have it 26, and let's do that. 27, I mean. Just enter. Actually, one more. There, right here. There you are. We put our stop at 65, right here, and our target. That we have enough time to use. I'm gonna check on my trading view again to see where we put this. Right, we have a. Let's put this on the FTA. The FTA would be. All right, I'm gonna put it here. Trying to find an FTA on the screen. You guys can't see it, but I'm gonna put it at 37.80. I'm gonna come back to trading view so you guys can understand why I did it. 37. There. Right. It's not as the tight entry that I would like to take. Normally, I would be entering, looking for entries that are maybe on the 5-minute, maybe on the. I would be looking for entries that are something like so, right? Somewhere when we see this breaking out, somewhere in here, perhaps on a retrace in the lower time frame, get in and have my stop perhaps at the same place or maybe even tighter, and that would be the stop. You understand that if I take a position, an entry with that would be 10 pips, it's going to be much different than what I currently have with its, how much is this? 29 pips. That's a lot of, that's typically, this is not the main strategy. So that's why it is much wider. But it is, of course, to show you guys how you could frame an entry based on, the idea top-down analysis, and then you go in, you look for that reversal. In this case, it's not very sharp the way I did it, but it's for demonstration purposes. I'm gonna switch back to the trading view, and we can talk further on this entry. All right. Okay. All right. So that is the where we have a monthly order block. No, we didn't have a monthly. What am I saying? No monthly order block. We had a weekly order block, a weekly quasi. We had this beautiful reaction from that, right? We had a second reaction right there, and then that created a weekly order block. That weekly order block was, let's see, actually, yeah. So the trade that I took was this. Let's see it on there. Something was like 30 pips. I think it was 29. something like that. Not very tight for my preference, but it is good. It is good enough, and the target was 80. There, somewhere right there. That's initially that. This is the FTA to me. Reaction on that order block. This is not a financial advice or a trading tip or any kind. That is just a demonstration how you can take the frame, create a framework of what your expectation is based on what the market is trying to do, which is reversing and completing this this quasi, right, daily quasi, as well as the weekly quasi, and understanding that there is a good chance that the probability is high that the market is trying to do this movement, right? Completing, in any case, the reversal and possibly even continuing to that weekly order block. Now, my entry and my targets is not even scratching the surface of the potential. And this is with a very, very wide entry, right? I didn't have, the sniper entry that I always have on my main strategy, but it's still to just catch the next move. So let's go to the hourly. And of course, what you want to be seeing is in 15 minutes is that this closes as an engulfing, like it is right now, and it has followed through. That's what you want to see, meaning you want price to close closer to where it is right now, perhaps come back a little bit and just continue. Something like that, right? If I can see that before the end of the day, then that's a good sign that I can leave this open, because we do have on the daily time frame reason to leave this open. This would be my target isn't exactly, actually, let me check the ATR to see how my target stacks up. What's the entry? Van Alvin says 36.77. Oh, it hit your TP1 already. Good for you. All right, let's take a look at the daily ATR. The daily ATR is currently at 58. So we can assume that price could go to 37.30 roughly if today is a regular day. Of course, we have dollar CAD CPI, so it's not a exactly average day. I would say you could expect more than 100 because of that CPI, maybe 110, 120, depending on how explosive that number was. I wasn't looking at the reaction on the CAD, but if it was explosive, then you could even extend it a little bit initially, just watching how price is going to continue or not. So this is 100%. So initially, I would, this keeps moving. Where's my my entry was at 95, which is at all not that great. At least, well, it's not bad, but it's not as sharp as I like to have it. I like to have the stops at lower than 10 if possible, right? 6, 5, 7. Sometimes I get 3, but those are not the usual stops. Couple of pips, and imagine you catch these moves with just a couple of pips, like 5, for example. You can write the big move of that day. Well, not actually this move, but something to the ATR. In this case, it's almost 1-to-1, a little bit over 1-to-1. But we'll have to see. I like this trade so far. And depending on how it closes, we have the possibility to extend this to be this far, right? So close a partial and leave the rest to run either to that TP of that daily structure, or have it extended for maybe this move, okay, all the way to that next one, or perhaps this one as well. I actually would rather have it before that area, even though there's that weekly order block that I think that is where the market is reacting to. But I understand that there is a very important, very significant level there that we have reacted very, very nicely before, and it is a level from before. So you wanna be cognizant of these levels. You want to be very sensitive when you're setting your TP. You don't want to have it beyond anything that could make the market react from. So I think this is the ultimate swing TP, not the ultimate either, because if you have a weekly, and we already have that weekly, the ultimate would be, as I said at the beginning, the ultimate would be all the way back to that high. That's the ultimate target. But that's a bit too how do you say that? A bit too much right now. Too ambitious. That's the word I was looking for, right? So currently I would just have my TP, with the information we have, I would just have my TP. Let me move this around a little bit. I would have it, currently I would say I would keep it to, the structure until I have more information, that how the daily closes, and then I'll decide whether I want to leave this open or not. This is a very nice one, Van Alvin. Thank you very much for that. It's nice. It's very nice to hear you trading very similar to me. That's very, very nice. All right, we have someone asking about the Euro NZD. Maybe we should take a look at that. What do you guys say? What do you guys say? Well, we'll leave that, and maybe we can revisit this trade later on and see how it went. Maybe later on this week, and see how this fared. Let's go take a look at Euro NZD. Remember, guys, if you are enjoying this moment with us here at the 5ers, don't forget, you can support our stream. You can make it keep on growing, becoming better than it already is, by hitting the like button. That will send the proper signal to the algorithm of YouTube to position us better in that space. Also subscribing to the channel. Those are the things that we can do. Let's do the Euro NZD before we log off, because the time is running out. While I do this, I would like to invite everyone for our weekday. Every weekday we have a workshop in the Discord server. The only thing you have to do is buy an account with the 5ers. It can be the smallest account. $39, if I'm not mistaken, is the price, is it? Correct me if I'm wrong. I think it is still 39. Anyway, it doesn't matter. But the smallest account, you're already in the Discord community, and you can, the community is free. It comes with a package. Just have to have an account with us. Okay, so the monthly doesn't tell us anything. Yes, there is an order block here, but it's way too wide. I don't like trading these. They're not defined enough for me to trade from. I'll mark it, but it's not something I want to be trading. The weekly time frame. What do we have? The weekly time frame, the neckline is here, and as you can see, the neckline hasn't been taken, right? This isn't a significant move. Right? For those who are wondering, the definition this is to me. Okay, what the rules exactly are, it's up to you to completely define it the way you think is best. Okay, so I don't see anything here on the weekly, so that monthly order block is of no use. We do have an order block here, which has already been mitigated. Has it? Yes, it has been already been mitigated. This is the weekly. So let's mark it as such. As I was saying, we do have a workshop where we will be, talking, discussing anything related to trading in about 50 minutes from now. All right, so do we have in this time frame? I think this is going to break and continue, guys. Look, it doesn't break any of these necklines, right? That's to me is a sign, of strength. It means that the market it's not creating those reversal patterns. And if it's not creating the reversal patterns, perhaps that means that the likelihood that it will continue is quite large. Meaning, I think, there is a good chance that this could just continue. We'll have to see. Of course, I don't know. We'll have to see that. But if that's the direction that I want to be long, look at that beauty. Look at this beauty here. Look at this. Oh, look at that. Man, I wish I saw this before. That's on the daily time frame. H4. No, this isn't a quasi. No, it isn't. So it doesn't fit. It doesn't fit my entry model, but still very tradable, I think. All right. So the H4. Stephen asking me about fundamental news. I have how they will affect the market. I think you're asking the wrong person. I'll be honest with you. I know about the news, and I know what's happening, and I know when they're happening most of the time. What I try to do is I try not to focus too much about the direction, right? But the volatility. So regardless of what direction is going to go, what I want to know is this, if there's a deadline or if there's a meeting coming up, is the result of the meeting going to create a lot of volatility or not? That's the question that I ask myself a lot of the time, right? And not so much the direction, because the market can go up and down, can go up on bad news, go down on good news. So I think that's a little bit more complicated, and I leave that to, for others who are more versed in the fundamental side of the analysis. I'll be honest with you, I don't think I am the right person to ask that. I just look at the volatility. That I have a good reading on what is likely to move the market from past behavior, past data, and so forth. No problem, DJ. I'll be waiting for you and everyone else who wants to join us in our Coffee with Trader. That's the CWT. That's what it stands for. All right, so we do have a H4 order block. There is a quasi, but it's not formed yet. There isn't here anything that I can trade. There is an order block here, but it's not fresh anymore. It is reacting quite beautifully, but it's not something I can use. So what can I say? I'll have to wait actually for, no, that's not even, yeah, that takes a long time. I think, let's see. I don't have a reason to go long on this. To me, the daily reason was here and it's already gone. Right, that's that order block I wanted to be long from, and that was something. But now the opportunity is no longer there. So I don't think I should base anything on that structure, and I don't have anything else. This is 4, 6, 8 on the 8th candle. That is relatively fresh. Is. Let's see, if we don't consider the fact that it's not too fresh, do we have reasons to have taken this? Not really. No, not really. Actually, there is. Let's see. So I would be, but it's already happening. It's already happened, I mean. Right, so we do have one structure here. This is the order block. I didn't touch it, okay. It's one big one, which is this. It actually did touch it because that one was never, let me test if it was ever invalidated. Wasn't, look at that, it wasn't invalidated. Okay, so that means that it's one big candle. But let's see if there's how many of these. There's 2 and 3. Okay, no, just 2. Okay, so that one is yeah, this makes sense to me. So this is the H1 entry order block, and this one as well, right? So you have H4 and H1 telling us that this is the area you want to be going long from, and then I would go to the lower time frames and catch my move from the market reacting to this order block, right? Doing this. And I don't know if it did give that opportunity. Not on the 5. Actually, yes, this is the quasi. And this would be the order block. All right, so depending on your trigger signal, you could have been in that trade. All right. Actually, there is even a much nicer one. No, that's nothing. Okay. All right, that's it. I think this is also on the 1 minute. So I would have entered something, when, depending on the setup, taking it on the 1 minute, putting your stop below that order block, and target something on the hourly, right? On the hourly, it makes sense to target that order block. So that would have been the trade that I think was to be made, right? But of course, you have to see it in advance, and I wasn't seeing it in advance. That's one trade, and on the opposite side, there is a fresh order block there as well. You could, depending on the ATR, look for that short. But I think that's enough for us for today. I invite everyone watching us, if you're enjoying this, meet us in the Discord community, where we will be talking more about trading, and it's going to be fun. So I'd like to thank everyone for being with us today. We are trading tomorrow again, live in front of you. Same place, same time. I hope to see you there. Thank you for your attention. Goodbye. Let's see how we close this scene. Still getting the hang of it, but we're getting there.